Yep.
All right, sweet.
And we're live. Hello and welcome to a historic special live stream. I'm Maddie ALLin, and here we have Axis Alive. Welcome.
What's going on, Maddie? Everybody in the chat. Hold on, I'm pulling up the chat right now so I can make sure that I'm keeping tabs on everybody. But thank you for inviting me on. I appreciate the opportunity to come and discuss these most recent happenings in the markets. It's been quite a wild ride over the last 3 or 4 days. So yeah, I can't wait to get into the juicy details.
Yeah, thank you so much for being here. You're definitely a voice that a lot of people love listening to. And that's because you have so many interesting things to say. So that's why I wanted to get together with you. Today has been a historic Monday because over the weekend we saw the stable coin USDC depeg, and we saw that was due to some bank failures. You know, back in 2008, it would have made the front page of the London newspapers. Banks on the brink of second bailout. But nowadays, it seems like the media covers this completely differently.
Yeah, I mean, it's just par for the course right now because, why worry when you can just count on the FDIC or the Fed or whoever's in charge of the money supply to just go ahead and print you some more. I mean, it doesn't, if there's no harm, there's no foul, right? Okay, so what? A few people get hurt, but generally, like the economy will go on, right?
Well, in past bank bailouts, that certainly has been the attitude, but this time was different because crypto was already in position. In 2008, when you had bank failures and it used to be that you'd have a bank panic, a bank run every year, before the Great Depression. That would be really common. But now it's bigger and bigger failures that are happening. And, I think that now that crypto exists, it's even a different situation than the 2008 bailouts, because as we saw today, crypto was pumping instead of dumping. And that to me shows a certain level of confidence. Why do you think we saw that today?
So unlike 2000 and well, the stage has been set, the table has been cleared, so to speak. All the leveraged money is out of the system, and crypto made its bottom before. What I mean is mainly in the crypto, right? With the failures of Cell and Luna, FTX, and now that contagion is now spreading to like the legacy banks, right? That were supplying some of that most over leveraged tech startup money, right? But so why crypto? Why now? Well, this isn't 2018 anymore. Back in 2018, Bitcoin went to $20,000 in Christmas, and then the following Christmas it was down to 3,200, 3,180 on some exchanges, and I was right there buying it.
Oh, yeah.
Obviously there was concern that it was going to go to 2,200, but as with all good things, and the charts don't lie, the price was supported due to the underlying mining economy and the long-term believers. Like, that was par for the course for Bitcoin at that time. But the narrative was like, oh, it's going to go down. You're going to have a mining death spiral. But now it's so much different because now you have this asset class in Bitcoin where a hedge fund manager can bring in $500 million and watch the price of Bitcoin go up to $60,000 from 15K bottom and realize a 4x return, effectively printing $1.5 billion out of thin air, right? In price appreciation on Bitcoin. And that's never been able to happen in such a fast time frame. Like, a lot of times, when you were seeking that kind of return in legacy finance, you needed to wait a decade or 2 decades and invest in the right things and help procure that business along. So this is a unique time in history where Bitcoin's now relevant, here to stay, and accepted as a multi-trillion-dollar asset class, soon to be. And you can just trade so much volume on that pair now that you know it's got the attention of the entire world. It's a global market that's open 24/7, 365. And so any kind of shortcomings in one sector of the world economy won't fully affect the rest of the world. And so, Bitcoin is bootstrapping this new movement of free and fair money for everybody. And I think a lot of the way to think about this is in the case of, like, with Ethereum or Hex, some of these better investments in cryptocurrency, they're seeing the most returns and the most success and the most adoption rates. And it's fun for the big guys to be able to have a pond to play in, to splash around in and make a couple billion here and there. But a lot of that water is going to overflow out of the cup or out of the pond, and it's going to fall into the cups of all of us non-VC retail guys that had the brains and the wherewithal to sit through the bear market and be in the assets that are here actually innovating and changing the landscape of finance and giving us an edge on regular banking products, right? And Hex has obviously got to be mentioned here because it's the first mover in a whole new class. It literally sparked DeFi, right? Anything that's DeFi is a product of the marriage between Hex and the ability to trade on chain with Uniswap. Those two things came together in a way that was so beautiful, and it could have only been done one more time. And so because most of the liquidity in Hex is tied to the USDC, and the USDC decided to depeg, naturally Hex's price started to rise, and all you saw was green candles print 15 minute after 15 minute after 15 minute, just green candles print all the way up, because it was showing the relationship between something that's traded truly on chain, backed by true assets on chain. And so when that thing that it's truly backed by starts to fall in value, it naturally rises in value against it, because it can't be manipulated back in any which way. And so that started this this domino effect of, oh shit, the Hex price is moving without everybody. It's just going, because USDC is losing its peg, right?
Friday night, it fell 10%.
Yeah, I caught it at, I saw it at 91 cents on the dollar. And actually, I went back and watched the stream with Maddie and Tangent, and they were streaming live in front of like 500 people, because everyone was wondering, like, oh, what is going on? Like, what's going to happen to USDC? And then we started tracking the Pulse X sacrifice address and how it was cornering the market on DAI, right? So not only is Hex a huge piece of this puzzle, but the backstop, the new Federal Reserve of cryptocurrency in the OA, is able to protect its position and grow its position and make sure that it's sourcing the best DeFi products and garnering large percentages of the supplies of the meaningful things in DeFi. And so it was really a big eye opener. And this is that moment in history we'll look back on and be like, wow, this was the event that really pushed Hex forward. And it was when Hex really started to go viral.
I made the argument when I was streaming with Tangent for 5 or 6 hours on Friday night, as all of this was happening. We were seeing in real time what looked like the Pulse Chain and Pulse X sacrifice addresses stopping the contagion throughout all of crypto. They were strategically using USDT and USDC to buy up DAI and to stop the market from panicking further. So that was truly incredible. And to see even just a few $1 million thrown around and a few $1 million profited. But I think that the value for crypto in general was much greater than just the input there.
You made a great point. And I felt the same way. I think our intuitions are aligned in that we see what the motive is of such a large wallet like that. They're trying to protect DeFi. They're trying to protect the ecosystem that matters the most for the progress of the cryptocurrency industry, which is making sure that DAI is one of our only true algorithmically traded balanced pegged stablecoins, right? It's like the one that is the most known, and there are others, but you're right. What an amazing act of like servitude, right? To just see that live. And I'm proud to say that I'm part of that ecosystem, because we're gonna look back and just be like, wow, like totally changed the game, cornered the market, backstopped all the fallout. Without an actor like that in the system, who knows where crypto would be.
Yeah, totally. And even as YouTubers, we had a responsibility to like not scare everybody, but just report on it and just witness history being made. So that was a really special moment for all 500 people who were tuning in live and everything. That was really cool. And hey, if you're watching now, hit the like and subscribe button, and make sure to check out the link to Access the Lives channel that I have there at the top of the description. So, the other thing that you mentioned that I think circling back to is important is how's the crypto market different than the legacy system? Well, what we saw over the weekend was that the legacy system was closed and crypto was open. And crypto being 24/7 around the clock, I mean, there was like a week worth of business hours that went by just during the weekend. And so I think that that's really critical just in the psychology of investors deciding which way do they want to run. Do they want to run out of stables into because I mean I'll point out like as soon as I saw USDC had depegged half of a cent, I was like, okay, I know exactly what's going to happen. Time to get out of USDC. So there was, on Friday afternoon, there was an opportunity to get out almost pretty much at full price. And, that's a lesson to be learned in and of itself. But in terms of investors running one way or the other, you could tell that some people would trade out of stable coins into Coinbase, from Coinbase to their banks, hopefully banks that wouldn't collapse, right? And then you had people who were running the other way. And I think that that's the most critical is the people who were running away from the controlling system to the system that's permissionless and borderless and operates 24/7 and gives people sovereignty over their money. So that was really cool to see. And I participated in this moment of choice, like how much do I need to live off of, and how much do I want how much of my money do I want to control myself. And so I packed the bags with Ethereum and Hex.
So you might not know this, but I've been very bullish on Hex for a while now, and I might be
Really?
posting charts that are sending us, back to 20 or cents or higher. And so for anybody that follows that kind of content, it's not like I'm just posting like stuff that can't happen. It's actually probably going to happen. Like you can easily see that the chart continues to make new highs time after time. And this was a unique moment, correct? Like you couldn't predict the how or the why or what fundamental news event or what it was going to be. But this was where people were forced with the choice to make a choice of, do I want to take the risk? And remember, a key word here, take the risk of sitting in a stable coin. That's crazy because before the sentiment was flipped, it was, I feel safe in a stable coin. But now all of a sudden, everything that all that solid foundation you were standing on was pulled out from underneath of you. And so you had to decide, do I believe in the Federal Reserve or the FDIC or these backstops that they're going to come in and save the peg of the USDC? Or do I believe more in the Hex contract? Or do I believe more in Ethereum or Bitcoin? And I was watching the charts live as they were creating these springs on the 15-minute chart. And it was clear to me that the cryptocurrency economy believed that Bitcoin and ETH and Hex was the solution to the problem because they continued to dump their falling stablecoins into those assets. And so I think that's the most important thing to look at here is what other things are store of value type assets that you go into when something like the dollar starts to fall or when your stable coin starts to depeg. And it's like gold, right? Gold is a thing that pumps when the dollar starts to crash, right? And so it did that, right? And so, I mean, the dollar and crypto are both acting the same way in that they're an inflation hedge and they're a safe haven for money that doesn't know where to go.
Yeah, totally. And it's those types of like the macro landscape, like it changed a little bit when people stopped trusting stablecoins as much as they did a week ago.
Yeah. If you want, we can. I'll share my screen and we can just bring up some charts, basically, to kind of set the narrative here a little bit.
That would be awesome.
Let's see what we got.
Michelle is saying in the chat, V3 soon. Question mark.
What do you
Yeah.
think?
Oh, I think it's one day closer. I think that all this syncing stuff is going to be really interesting. Look, I'm going to have a special guest tomorrow night. It's, a developer who is an expert in pulse validators. So that's, not everybody in the community has met Gamma DevOps yet, but he rocks. So
Mhm.
While all of the updates have to come from Richard Hart, I think it's going to help me to understand what it means to just set up the validator side of things, because that is one of the steps on the way to launch, is like getting the entire community up to speed with that.
Yeah.
What do you think?
Big shout out to Gamma. I think I've seen a couple of his videos now, and he's very, very upfront about his position on things, and he's very realistic and pragmatic in his approach to explaining things. And so I think he'll be a great guest, and he will kind of be able to shine light on things that are less understood about this process and how close it really is. I mean, personally, I think, my intuition is telling me that it's close. At least for the test net, that's close. And then any speculation on mainnet, I see it happening one of two ways. It's either, months away, like short-term months away, or it's 1 year away. And I think I'd like to think that it's actually probably more the short term, because we're going to try and make this happen in a timely fashion, and take advantage of this key moment, right? We're going to have that safety net when let me show you the Ethereum chart. So, if this chart plays out, gas fees are not going to be getting cheaper anytime soon. Like, they're about to be bananas. So let's see if we can find it here. You can see here, this is an Ethereum chart I got on the weekly. Please, Pulse Chain, save us, because right now, if you measure the pull of this move here, where you're inside of this bullish pennant, you can see down here on the bottom diagram what a bull pennant looks like. You get an immediate reaction off a base, you chop sideways in a range, and then when you make that breakout move, it goes and you measure the pull, and that's where you're going to go. Well, that's targeting that $2,800 to $3,000 per coin in relatively short order, if it happens in the same amount of time as it did prior, right? We could assume that it might happen a little bit slower, but I mean, by June, you would probably see a 2x on Ethereum. And that means that gas prices are going to get out of control. And so I think if there was a good time to launch Pulse Chain Mainnet, it would be when stable coins are falling out of the sky and gas fees are going bananas, and there's plenty of energy around the speculation leading into that, with already a great looking hex chart. This looks amazing. Like, this has been a meteoric rise for hex, right? If you zoom out on the longer time, like, we're way above like these zones of control, right? One thing I have noticed is that the bias to sell ratio they're about neutral, whereas like we were out and doing bias to sells like 2 to 1 for some time. And so like that was an immediate concern for me, because I was like, okay, so are we going to come back and retest some of these lower levels and give new participants a chance to accumulate coins at lower prices? But then I remembered that there's just no market supply. Like, when you look at the market supply and the liquidity pools, there's just nothing available. And it would take a tremendous amount of effort to push us down. Not because people can't do that, but because people are unwilling to do that. So I'm going to pull up the liquidity pools here.
Is that something, are you able to backtest that hypothesis, like in a way to where we can see if Hex is really different than other coins? Because I know that Hex does have different dimensions that other coins don't have. And I'm just curious if, how strong that hypothesis is.
As far as Hex being able to continue to change direction,
like having such a low supply, like let's say, like, let's go to 2 years ago, there was no V3, like V3 Uniswap didn't exist. So I'm questioning like how little supply we actually have, because I really believe that it really, it's, the supply is being held by people who have been trained and incentivized to not sell, and who are going to reach escape velocity at some point. Like the people who can live off their interest in Hex, like it goes back to what Hexologist says sometimes. Like, how many millions do you need in the bank? Like,
Mhm.
do you want all your money in the bank or do you want all your money in crypto? And so, so when I think about like how much supply is there, there's what the V2 is going to tell us. There's what the V3 is going to tell us. There's the liquid coins that people are holding that might, you know, they might be trying to trade and time the market and buy the rumor, sell the news. But people, you know, except for the stakers, you know, people have to make that decision when they get there. Oh, and you've got a really cool graphic here for this.
Yeah, so this is kind of an idea of like how many coins are available on market. So if you've been following Maddie or Game Theory Gang and listening to Hexfire.io, Crispy Man over there, talk about the user supply at all or the bow waves, there's virtually no sell pressure. It's literally just blue skies. Like the only people that can sell are people that just accumulated a little bit or that are showing a habit of doing so, and they keep wrecking themselves. Like we saw a guy lose. Your friend Sami just posted a video of some guy lost $260,000, I think it was, or something crazy like that. And
That's really sad.
you know, I mean, it's like, you know, this was a unique event. Again, when you buy something like this that can do these kinds of multiples on this low liquidity, be careful and understand what you're doing. There's only 55 million hex for sale
ALLin.
on market. That's across all the pools, right?
Yeah.
So you can see on the diagram on the left, this is like the water, the rainwater is getting, it's starting to get dry out there, and you're going to want to conserve all of your rainwater because if you get thirsty and you run out of water, you're going to die. That's effectively what we're saying here in terms of holding hex. Like if you want to put your water back in the jug, somebody's going to scoop it back up because this is a big battle for who can get the best price on hex right now, where the buyers continually are pushing the price up and no one is willing to sell. And we could see that on this liquidity. So yes, and in answer to your question, I don't know if there's another coin that has been this scarce and this popular as far as community size and demand. You know, I've been seeing like 300 or 400 buyers, even 500, 600, 700 buyers on different pairs versus, half as many sellers. And this has been going on for literally months. And you can go back and watch all the videos that we've been posting on Maddie's channel, on my channel, since back in December, and you can see that that's a clear relationship. I think if I pull up the WETH chart, let's see, which one is it? 610 buys to 489 sells. This is the closest the gap has been in I don't know how long. Like this is the closest the gap has been, and still buys are outnumbering sells, right? The price is literally going up with 100 grand more sales volume than buy volume. The price is going up on more sell volume than buy volume. That's so bullish. Like I don't know how to say it another way other than this stoplight right now is telling me that the market is neutral, and what it's telling me is that we're at basically a battle between buyers want cheaper prices to buy and sellers want to sell higher. And so it's like, well, I'm not going to sell unless you pay a higher price. And the buyer's like, well, I'm not going to buy unless you're going to give it to me for a better price. And so the price just continues to gradually creep higher and higher to the few guys that are willing to pay a little bit higher of a price. And what it's doing is it's pushing this liquidity up higher and higher. So these thicker bands here, if for those that are new to this chart, this is called liquidity chart. I'll zoom in here so you can see it a little more clearly. The red line is where the price is at right now. Currently, that's sitting at 8.22 cents against Hex versus USDC. Remember now, USDC gained its peg again, and Hex didn't go back down, meaning that there's been a reaccumulation and even less market supply. And so, effectively, what we've seen over time is, see where this candle falls down really fast down to here. These short candles down here used to be back here at 7 cents, but over the last couple of days, market makers have come in and set liquidity behind price in the form of USDC, so that if the price falls back into this range, they can pull their market, their liquidity position off market and absorb the hex into their wallet, and then take the liquidity away. And so this is what has continued to occur, right? And now look at, we haven't even come back to test 5.4 cents, where we're really where the market wants to buy. And so if you were bearish on the asset, you could say, well, maybe somebody wants a coordinated attack on the price and try to push price through all of these bars. But you've still got to fight through like $1 million of liquidity here without anyone's limit orders getting hit or any other large player coming in to absorb. And so what this is creating is this huge disparity between the bid support back here that wants to buy tons of it for cheaper, and the guys that are willing to just pay what the price is at market, because they're chasing green candles. We have momentum and demand in the market right now that we didn't have back at the bottom. Volumes
The
are
the
way
mar
up.
yeah, the marketing engine is just getting started, because I've always said, like, the best advertisement for Hex is the price going up and people
100.
becoming aware of that. Um,
100%.
and so, I mean, we saw today, Meet Kevin, posting about Hex,
I was
like
trying to find
trying
that.
to
I
make
think I
fun of
posted
it
it.
in a way that was just so silly. It like actually was just unclear if he was endorsing it or not.
The dude
Which is
literally,
great.
I don't know if he put the sticker on the thing or if he saw that there, but this is literally, this thing got put on
Oh, dude.
Newsmax.
What?
Yeah, dude, this thing got put on Newsmax. Like, here's your advertisement.
the,
SVB saying, go to Hacks.
the level of like organic like reach that Hex has, you can see it right here. It's incredible. Um, another thing that I just realized this afternoon, um, RG3 is going to be interviewing tonight Gregory Mannarino, which
Who's
is
that?
he's like one of the most popular alternative financial commentators. And it's somebody that David Feeder has always like turned me on to. But this guy streams twice a day, and he gets like 50,000 views on YouTube talking about finance every single day. And he does, like, he doesn't work for anybody. He's kind of like an alt finance reporter. And so yeah, how incredible is that we're going to get to see that interview tonight?
And I think that this is just the beginning, right? And as you were saying
Yeah.
before, I think this is just the beginning where, even Ivan on Tech, is posting about how he's now promoting Nomics and Coin Paprika because they're properly listing Hex on their listing sites. And I don't know, he's probably speaking to, how many people does he even have? Let me see. He's got to have like hundreds of thousands, if not a million followers on Twitter.
He has
So
460K.
it says here 404. If it's the right guy, it could be a fake. No, this could be the right guy.
Oh,
450K.
I'm talking YouTube.
Oh, on
It's
YouTube.
harder to grow on YouTube too than Twitter.
Okay. Well, dang. Oh yeah. Shout out to the chat, you guys. Like, my YouTube channel's been growing fast. Like, I already got like almost 3,000 subs, and I just started like a month ago. So, thank you, you guys. I really, really appreciate that.
Yeah. And go follow now. The link is in the description.
My dude. I did want to. I want to toot my own horn a little bit here. Not really. I just
Do
want to
it.
show you guys a bull pennant. Like, I posted this on
Can you
February
zoom
16th.
in? Yeah. Perfect.
Yeah. So we got here, like, this is Hex, but denominated in Satoshis, right? So this was when Hex was trading at 223 Satoshis. And you can see here on the daily chart that we came up and we tested that downtrend. It's behind this little block here, but you can see we tested this downtrend resistance, tested it as support, and then we formed this pennant. And I said, basically, this is a bull pennant. They're easily recognizable. They're popular chart patterns. And the way that you measure the breakout is you take the pole, which would be this segment here, where you had the previous breakout, and then you put it at the breakout level. So then I came back a couple weeks later and posted an update here that we actually got the breakout on both the ETH and the Bitcoin pair. And then the target was 162% higher as of that point. And I remember, like, shortly after I posted this, that the price actually broke down to retest once more. But, of course, I wasn't phased because I got this 15-year outlook on this asset. So I was like, it's okay, right? I'm not too affected by that. And then, so then I went back and looked the other day, and then this is where we're at right now on this. So we're looking at, it's been a nice accumulation range and each little pullback. And now we're halfway there, guys. We're halfway to that new level, right? So I heard someone in chat to call for 9 cents, and it'll happen tonight. The thing is that when these things start going up fast, like, they can happen at any time. I've been fortunate in that, my calls have been happening on time. But for me, the time element is kind of just going to play itself out. But yeah, this is like kind of what I'm seeing. You're getting new eyes on it. More people want exposure and they need it. And so, like, you're only halfway there, guys. We got more left in the tank for this move.
Wow, that's exciting.
Yes, sir. What else? Anything cool on the Twitters here while I'm on here? These are the other banks. This is from Jesse Powell, who's the CEO of Kraken. He's saying that these are the other banks that are at risk for falling out. But I think because of the Fed's measures that they took, that they might be able to stop a lot of that from happening ahead of schedule. And that's kind of why you're seeing this breakdown in the bond market, which is signaling a weakness in the dollar, right? And so to come back to my chart set, if we take it back to the beginning of this, again, these are available on my website on accesslive.com for pro members, or you can purchase them standalone at like $10 for one, and I do
Beautiful
them a couple
site.
times a week. Thank you. And so I go into some. This is some data, so you guys need to look into what that stuff is. So this was from today. I have here. This is the dollar currency index, and I go into like a breakdown of like what this is meaning for the dollar, what this is meaning for cryptocurrency. You can see here I'm using the DMI, which is shout out to Kareem. It's his favorite indicator, and then the MACD,
Oh
which
yeah.
is one that I learned about from Whales Only. So basically, what's going on here is on this is a weekly time frame. This is a daily time frame on the chart, but I put on the weekly length for the DMI, and what you're getting here is a bearish cross on the weekly DMI. So when the dollar is bearish, it means people are exiting the dollar and they're taking positions in things that'll have a faster rate of growth than the decay of the purchasing power of the dollar that they're leaving. So when you see these crosses, it's actually setting up for a bigger, longer term downside action. And you can see that the dollar is down in a descending channel here on a shorter time frame, but on a longer time frame, it's in a massive uptrend. But yet the price is coming to test this key inflection point of confluence where these two channels midlines are crossing. Right when the bearish cross is happening on the weekly DMI, right when you're getting that first red print on the MACD, and then a bearish cross on the MACD. So it's a lot of confluence in this chart saying that dollar's coming down hard and fast. You know, look to position into something that's actually going to create a return for you.
Yeah, I mean, Quant Gang used to talk about that exact scenario a lot.
Mm-hmm.
So that's
Shout out to Quant Gang 2021.
wow.
That
Yeah.
was amazing.
Yeah, we ran for a little bit over a year, and actually, Game Theory Gang turns 1 year old tomorrow, so that's cool.
Wow, that happened fast. Wow.
Yeah,
Dude, we've had it doesn't really seem like it's been 3 years to me. Like, Hex has been around for 3 years. We're on our 4th year now. Isn't that crazy?
it's crazy.
All the good stuff that's happened, and man, the airdrops. I always hear you talk about how much your onboards have in airdrop money.
Man, yeah, the airdrops. Who would have predicted it? Well, I kind of did, but like you can live off airdrops. That's insane.
Truly. Now, only Hex stakers though. Anybody else, you're probably not getting airdrops.
That's right.
This is kind of like a cool little thing that happened this week was, during the weekend, this is the 15-minute Hex chart. And this is what happened when the dollar depegged. We went from just like a gradual increase in slope to just every 15 minutes, boom, 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 boom. It just goes up and just keeps taking out these levels. And that was because the USDC was depegging. So naturally, because half of Hex's liquidity is tied to the USDC, as the USDC fell, nobody even had to buy Hex, and the freaking chart was going up at a rapid rate. Wasn't that amazing?
Yeah.
And so with that, I was like, okay, well, I woke up the next morning and I saw this. We had made a new high, and I saw this big bid come in. It was $650,000 of bid volume came in and spiked the price up back for almost a retest of the high. And I was like, okay, let me look at the LP. Well, I looked at the LP, and it looked to me like, damn, like there's just no more market supply out here. So here's 8 cents, 10 cents, 14 cents, and there was just nothing available. So I was like, I got to do a call to action. So I went and I made a tweet. And this tweet's been seen by almost 25,000 people. That's how many impressions this tweet's gotten. And all I said was, you guys need to set liquidity positions to sell Hex at higher prices so people can actually get into this thing. Because otherwise, it's going to be a slower move, and it's going to be a game of attrition of who's going to wait to put their liquidity a little higher. And it's nice because you can actually make decent fees doing it, especially if you're going to provide like $10,000, $20,000 of Hex liquidity, 8 cents, 10 cents range. Now, if we go back and we see, that was very well received, and I did make a little quick video on how to do that. So if you want to check that out, go to my channel. It's under videos. It's the most recently uploaded one, Crypto Sloth and I. Big shout out to Silver the Antidote for giving me a lot of my knowledge on liquidity providing. He's been on my team for a while now, and I really have a lot of respect for him. He gave me the confidence
Awesome.
to come out here and produce, right? So here I am producing for
Yeah.
the community.
Hell yeah. Shout out to
Um,
Silver.
yeah, for sure. And Sloth too. He's a really smart character. He helps. He just like everything that I say, he says it 2 times better, which I love. You know. And so anyway, back to the liquidity. Look at how this has changed now. Like this is where the price stopped. The liquidity stopped here on this where my this gray bar is. But look at somebody took that call to action and they provided liquidity all the way out here to 8.5 cents, even if a little bit farther,
Wow.
all the way up to 10 cents. So it's like people are seeing that, they're learning how to provide liquidity. And now if you zoom out, there's somebody who's got, I think this was, I'm trying to remember off the top of my head how much this was. I want to say it was like 4 million hacks out here, roughly. They put out here
Mm,
at 24 cents. So like somebody's saying, hey, you want my 4 million hacks? You come out here and you can get it at 24 cents.
there you go.
This guy here put out 1.24 million at 19.7 cents. So people are saying, hey, you want hex? You can get a lot of it out here. And I like that. It's like, okay, it gives people a target, right? It gives people a
Yes.
place to take the price. Because if it gets out to here, you know, likely what will happen is some sellers will come in and because it's high slippage, they can push the price easily back into these short bands. But then again, ratchets back up. People have to move the liquidity forward. Price comes back down. People have to move the liquidity forward. Price comes back down. Bid support comes in. And this has just been ratcheting back and forth. Again, you see all this liquidity here on the bottom, but that wasn't like that a couple of days ago. This is what we had. Just drops off a cliff. There was nothing at 8 cents. So to shout out to you guys, the hex market makers. You guys are the real OGs here. You guys are
L-
the ones that are giving people coins to buy up. So good on you.
Yeah, get out there and show us what you're made of for sure. Um, so I have I have a question that's related to this.
Hmm.
What do you think is going to happen when the pulse chain snapshot is announced? I guess maybe that's not the right way to characterize it, but you know what I mean.
Mm,
Before the fork happens, it's predicted that liquidity providing behavior may change on an epic scale.
mm.
And how do you see that playing out?
So this can happen one of two ways. Either you get a stealth snapshot that nobody saw coming, which I
Yes.
think would irritate people, right? Because then they'd be like, "Oh crap," that would change the way that they would have approached the situation. But assuming that that's not what's going to happen, and we get like a small time frame ahead of schedule to have forewarning and make some moves ahead of time, the price of hex is going to move higher, faster, because people are going to pull the rest of the liquidity out of the pools. Because if the snapshot happens, they don't want to be sitting in a position where their liquidity gets forked over and gets extracted out by that harvesting bot. And on top of that, there who knows what the front ends are looking like and like whether
And,
or not you can quickly access those funds anyways, right?
and to be clear, the people who are in the first category who believe that a stealth snapshot is possible, those are the liquidity providers who have already probably removed their liquidity and are playing this one out from the sidelines until you know until the fork.
Exactly.
Um,
So unless
and
you're
of
like
course,
me,
I don't have a sense like what percentage of people would be thinking that way, but we know that's one of the possibilities, and then there are the people who do think there's probably the majority of people I would say would think that there is going to be an announcement
mm,
about when the fork will happen, what the black height will be, that sort of thing,
mm,
and those would be people who would still probably be in the mix here. Now, when let's say that the fork does get announced ahead of time, like how do you see that playing out? Do you think that people will pull all of their liquidity in the final moments um and then we'll see some like really weird price action?
I mean, yeah, they're going to pull it out, and then you know the only people that's going to leave liquidity in the pools are people. Yeah, yeah. Only people that's going to leave liquidity in the pools are the people that can print, 10 million a month, or like, at least in a reasonable amount of time, right? And then they can risk having liquidity on the exchange, and for whatever reason, because there could be a big enough actor that sees a benefit in letting the price have at least something to trade. Right. But generally, I think, most of our users are going to pull their liquidity and the price is going to, the coins are going to be accumulated at a rapid rate. And so you could actually see something like completely bananas happen where like Hex hits dollar targets even before the main net even goes live, and then what happens after that? We've seen it before with Big Payday where, you know, the fork happens and then people decide to take profit and,
Yeah.
hopefully somebody comes back into support price with liquidity, I mean, this would be a general like idea of what that could look like. This is like the most basic idea of what it could look like is, we could be a week or weeks away from that event. And then, and the last time we came off a 97% drop was back here in the beginning of the very initial launch of Hex. And that run up was something like this. And so why wouldn't it be that, the liquidity pools got set back to zero at our bottom here at 1.69 cents as far I saw the USDC side of the pair get down to as low as 1.2 million at one point. So there was literally virtually nothing to trade from the
Yeah, that's
USDC
right.
side. And so
Yeah.
I'm like thinking to myself, okay, so this is basically a complete reset on the chart. Well, then why wouldn't it be possible for the price to just go up and at least test the all-time high by then, right? Leading into this main net on people pulling their liquidity off, right? So yeah, I totally see where you're going with that question, and yeah, I do think it's very, very possible that you do get some sort of crazy move, and then you get a retracement. I don't know how much the retracement is after the fork, but people are going to be repositioning into Pulse, into PHEX, and you just got to think about the ratios of what was sacked for. I don't want to give away all the marbles, but just I've spoken on this stuff enough about what's possible with once Pulse Chain launches right after before the bridge goes live. And then to think about when the bridge does go live, what's the economic energy that's going to come into Pulse Chain from the EHEX side? Imagine wrapping EHEX, let's say the price of EHEX goes to 50 cents and then retraces back to 20. You can still bridge over a 20-cent EHEX to Pulse Chain and get a magnitude more Pulse or PHEX over there because all those coins are starting at zero, right? So effectively, you could see some insane price moves over there by bridging in economic energy from the Ethereum chain that's wrapped.
Oh yeah. And how do you see people valuing like their Ethereum copy versus the Pulse Chain copy of Hex after the fork?
I think short term, Ethereum is the mainstay. It's the most adopted EVM on Earth. There's 9 million wallets that have $100 or more of Ethereum in them. You have Genesis whales that are looking at maybe seeing a 5 to 8x on their Ethereum bags over the next cycle. That might want to reallocate into the EHEX on their chain because they're going to feel ownership of Ethereum still. So maybe that they'll feel like they have an opportunity to buy an 85% off Hex. Imagine 85% off Hex at 20 cents. Like that's a reality now. It's the kind of thing that we're facing, which is why I say risk is to the upside, still has been, still will be. And that don't get left behind. It's something I've been saying for a while now. Since December is the risk is to the upside. Don't get left behind, because once the 10-cent price floor is in, we're not coming back down. EHEX even is not coming back down that low. There's too much value in the contract by rolling stakes at 20 cents for big whales, and there's too many Genesis whales and new adopters that are already familiar with Ethereum that are going to want to buy those and scoop those coins up on a discount. And then as far as like the PHEX side of the chain, pre-bridge, you're going to have this problem where PHEX and PulseX are going to be more abundant than Pulse Chain, because only 40,000 people are going to be holding Pulse Chain. And so the majority of people are going to want to get exposure to Pulse Chain immediately. And so you could see this thing where the ratios get severely mismatched, where people are aping out of PHEX and PulseX into Pulse Chain early on, right? Trying to seek some exposure to that asset. But once those ratios get out of balance, you're going to see the tide shift back the other way. And so the reason is because if you can get like 20 PHEX for one pulse, for example, or 10 PHEX for one pulse, I'd be bridging over my EHEX that can get thousands of PHEX for one EHEX, right? Just because the ratios get mismatched. But that doesn't mean that those will lose value, right, on either chain. I think it's just going to be a messy situation off the rip. And, these are all things to be cognizant of. A lot of variables at play.
That's a lot of Hex for Pulse. I would almost see it in the other direction, that it would still take multiple Pulse to get one Hex over there. But I guess we'll see soon enough. I know on testnet Pulse is trading at 3 times what PLSX is.
Mhm.
So
And that makes
that's
sense,
kind of
right?
interesting. And that's about where my gut tells me it might trade. Of course, don't just go off your gut, but I mean it seems like, well, there are 3 times as many people that sacrifice for PulseX compared to Pulse Chain. So
Mhm. Yeah, that's basically where that number comes in, is adoption rates, right? So you can't ever know for sure how many new users are going to come into the network, but you can
yeah,
know what we're starting with. And so like those would be your base ratios. And I think, once you get 2x or 4x away from those ratios is when you need to start thinking about repositioning a portion, right? Not to like risk your whole bag, but just to like try to catch some of the mismatch of that base ratio.
yeah, yeah. This is an airdrop that affects 100 million addresses. So that's it's a lot of people to come play with us in our new
That's
sandbox.
exciting for sure. I can't wait. Like, just can Hex get 3 green months? Is Pulse Chain coming in April or May? Look, how high can this thing go? Like, I'm so excited about the EHEX run up right now, leading into this.
Yeah,
I
yeah,
really am. I think it's going to be bananas. I think you're going to see. I think there's a lot of people that was calling bullshit when we were breaking out at 3 cents, saying we were going to get lower prices. I even saw some charts saying that we were going to go to a half a cent, right? So it's crazy to me, like that wasn't clear then, but I mean, it should be clear now that this 10-cent floor is trying to be set, right? And so the only way that you can get economic energy on Pulse Chain now is through Hex on Ethereum. I mean, you could maybe take the risk of getting like Shiba Inu and hoping that it has some value over there, because that's like one of the larger communities. I think there's like 1.6 million wallet holders on that one. But
mm,
generally, I think Hex might be the one thing that doesn't get diluted like Ethereum, and it's not at risk of being below par in terms of stable coins, right? Because if you're holding USDC and DAI for the fork, what are those things going to be pegged at over there? Like, I think that even on testnet, they're like a USDC is like a 50 cent USDC or something like that. Don't quote me on it, but so like, are you going to
I,
want to take that risk?
to me, meme coins are part of like the Occupy Wall Street movement that just, got to the point where people are like throwing up their middle fingers and saying, I'll value a picture of a dog. Um, but I think that eventually that movement needs to like grow up and like get better tech. And I think Pulse Chain and Hex are the better store of value and the better network. And I think that is a testable hypothesis that we will be able to watch play out here over the next couple of years. I mean, if you just think about where is Pulse Chain and Hex going to be, uh, once Pulse Chain is as old as Hex is now, in 3 years from now, what's the ecosystem going to look like?
Mhm.
And you can see just from people time locking Hex how many people stick around. This isn't normal. And so I'm look, the market is in the disbelief stage.
100%.
And as a Pulse Chain, broadcaster myself, I am in the disbelief stage about how close we are to Pulse Chain. I literally can't believe that it's going to be in, days or weeks or months away. My mind is stuck thinking it's got to be still a year away. It's got to be a year away. But that just proves more to me that that's what you would be thinking,
Right
when you
as it's
get this
about to
close.
launch.
So,
Well, it's time to get excited, guys. There's a lot of reasons to think, we'll come back tomorrow night and watch Gamma. He'll give you the rundown. I'm sure it's closer than it is farther away, at least for sure for testnet v3. And if that's working as intended, you can hit the go button whenever, right? You can really do it whenever. So there's no better time than now, in my mind, to do this.
and to be clear, I've, like carefully negotiated with my with my co-hosts that we can't just ask him whatever we want because he's not there as a representative from the Pulse Chain team. And so we will be like super respectful because look, it's the, I would say it's the good behavior of the community that's being rewarded by Richard with all these updates. And, we don't want to screw that up by like, going behind his back and talking to a dev on YouTube. The focus tomorrow, which I think you should be equally as excited about, is that you're going to get to go into the weeds with somebody who runs hundreds of ETH 2.0 validators, like understands apparently how to like, scale things up so big that it's, almost impossible for them to crash. And so, it's a miracle that we're going to get to talk to somebody with that level of technical expertise. And so we won't be asking when is Pulse Chain, but what we will be asking is, what does it take to be a validator? How are people going to make that decision? And how, as people who are learning about the tech, how are we going to be able to maybe know when Pulse Chain is closer because people in the community understand how to run a validator in this new ETH 2.0 version.
Super, super cool. I'll be tuning into it for that one for sure. I actually don't have a stream for once. I've been streaming a ton lately. Probably I've been doing like 3 or 4 a week minimum, sometimes 5, plus a private session on Monday night. So it's like I don't have any time to watch anybody else's content. And by the way, this is my public service announcement. If I'm overrunning your guys' streams or like interviewing or like going on with similar guests and stuff, it's not because I'm totally unaware of that. I'm on gas on the pedal and I just have no time to look up. I've literally been building content out for the website and for my community and being on with everybody I can be.
That's how it should be. Yeah. So dude, cheers personal. To
that. Yeah. This is exciting. This is shout out to Money Gang Crypto. He's basically saying, I'm sure you guys have seen this before, but might as well do a reminder that on average, layer ones are doing 1,123x over 3.8 years. So my opinion is that Pulse Chain plus Pulse X are easily going to outdo this. I believe that that's possible because Pulse Chain is literally ETH 2.0 right in parallel. So like all the code is it's the same code base essentially. Like if you can code for Ethereum, you'll be able to code for Pulse Chain. All of the good applications will come over there and they'll actually get used in a place where gas is not as affordable in dollar terms, right? So I'm very excited for that. And I think that, this could be one of the largest launches and just the most insane adoption curve that we've seen in crypto. Everything will be vertically integrated and you're backed by the economic energy of the coin that did 10,000x and sparked DeFi summer in 2020. So it's a once in a lifetime chance to get an ecosystem that's fully aligned with the ultimate goal of price appreciation and fundamentals, in that Bitcoin did it first, Ethereum came and innovated and allowed smart contracts. Now you're getting Hex and Pulse Chain as one single unit in a vertically integrated system to do both store value and utility better and at a cheaper and faster cost than ever before. So I think we're going to blow these numbers out of the water within 3.8 years.
There have been 4 inventions so far in crypto that stand out to me. Bitcoin solved the double spend problem, created the industry. Ethereum created the decentralized, ability to be able to launch a decentralized app. And then you had Uniswap invented, on-chain trustless transactions. And then you had Hex that invented a new system of paying inflation to people who are more long-term, provably more long-term minded. And then now you're going to have Pulse Chain, which really is, it's going to be able to integrate all those things. Copying Uniswap, copying Ethereum, copying Bitcoin, all these things are being integrated in a way that's never gone together before. So yeah, I think that even looking back on crypto being the highest appreciating asset class of all time, I think that these are rookie numbers.
Mm-hmm. I like that a lot. And it's all in the face of the adversity of the Federal Reserve failing the economy, interest rates going to the moon, now pivoting, banks failing, falling out of the sky, USD stable coins depegging. But what do we still have? Sovereign cryptocurrency, immutable
Hell yeah.
sovereign cryptocurrency. And guess which one did the best? Look at this. This is amazing. Nomics. Shout out to Nomics. Even though they mess with our market cap, we're still cool with them.
Hey, I agree. I respect Clay Collins, even though he doesn't give us the best numbers he could give us.
Right. Well, so, and this is kind of what I'm pointing out is, whatever this complex token we mix, I'm not, whatever, I don't know anything about them, but look at what's in number 3 for year to date percent gain in times of distress. Hex is the chosen one. And
Wow.
it's funny for us because a lot of us are just been here and been a part of this ecosystem. And would you say that you expected this?
No, I would have thought other coins did better so far this year.
I mean, this is top 100, so probably not. It's not in the total.
No, I mean, yeah, that's
so,
where the real volume money on chain stuff. It's been going for 3 months.
Transparent volume, Frax 100%, Time 98%, Gate chain token 95%, and then Hex. So it's got some of the most transparent, only on-chain volume. We've done $768 million in volume since the beginning of the year. That's pretty good. So just to give you guys an idea of what that means, if you took the entire user supply of Hex currently and gave it a dollar value at 7 cents, it was about $700 million of saleable Hex that could be sold on market. So that's roughly 10 billion user supply that's liquid. So ignore the market cap for a second.
Yeah.
That's literally 700. We exceeded that in volume in the first quarter. And the quarter's not done yet. Isn't that amazing?
Wow. Yeah.
So that lays the runway for if there's any increased adoption, right? What do we know? We know that the most adoption comes after the green candles print. So we've literally done this on the same base user adoption, right? We had the same on user. I'll reference a chart here that kind of shows this relationship. You guys have probably heard me talk at length about Metcalfe's law, right? But
oh yeah,
shit, I'm starting to space. Which one was it?
The value of the network becomes more valuable the number of participants that it has.
Yeah. Veblen good. That's right. Thank you. I did take my omegas this morning, by the way.
Yeah, take your omega 369, everybody.
This was such an enlightening chart. This is from May of 2022, a year ago. And what the point was, this was during the deep dive presentation for anybody that remembers that. Anytime that first of all, yellow line is stakers adoption and blue bars is price. What do you notice this relationship of? Whenever the yellow line increases at a faster rate, it always comes with a faster rate increase of price action. So whenever the price is going up faster and more violently, that's when you're getting more adoption at a faster rate. So what that tells me is that the general market, generally the market is down. They chase green candles. That's what this is telling me. And so, so many people have been left behind on Hex price that need to buy now, and that's what's creating the squeeze of buyers wanting cheaper prices but being in disbelief, and sellers wanting higher prices and looking at everyone like, you guys are dumb, just bring the price up. We'll sell it to you at 20 or 50 cents. It's cool. We'll sell it to you up here. We're not going to sell it to you at 7 cents or whatever the case may be. But again, this is why I see when we look at our volumes here on this, and you see $768 million spent in 2.5 months in volume, and the price is up from, what was it at the bottom, like 1.69 cents, all the way up to 8 cents now. We've done a 4x on that volume. And now the liquid supply, you have about this much liquid that could be sold at these prices. But the chances of selling more than 30% of that supply before the snapshot is probably pretty slim. So just some quick mental math, like maybe there's $100 million of sell pressure at like 20 plus cents. 20 to 40 cents, somewhere in there. Maybe there's 100 million, maybe there's 200 million. Every time you do a doubling, that adds sell pressure. So there's some mental gymnastics you have to do to figure out what kind of runway we have. But because there's such low market supply and so few people willing to sell, knowing what's coming with the duplication, we've actually seen this. That's why they're holding onto their coins, right?
Yeah.
So
Wow. That's incredible.
it's amazing. And so just, I hope you guys really appreciate this the way I do. It's incredible. Like just how big of
Yeah.
a squeeze there is on supply right now.
Yeah. Ryan Lopez, thank you so much for the $50 super chat. Maddie and Axis, Hex Legends. Great job, guys. Amazing times. Hashtag go Hex.
Cheers,
Thanks,
Ryan.
Ryan.
Appreciate you. Thank you for the support. What else can we show the peoples?
Smash the likes or get out. We already have 420 people watching, and that number usually goes up the more people hit the like button at the same time. So go ahead and smash it for us.
So this is be a little just cool comparison if you want to get into what's happened before, and what's possible. If you go back and you look at Hex, but you look at it relative to Ethereum, back from the beginning. I'm going to go ahead and delete this out so we have a clean chart, and we'll turn on linear chart, and we'll go to like a 4 hour so we get a lot more nitpicky data, because it's going to prove my my point here. So we'll go back to the very beginning of Hex, right? In the very beginning of Hex, this is Hex denominated in Ethereum, right? This is when everyone called it a scam and that it wasn't ever going to do anything. And like you saw this initial rally, and then the price came back and crashed really hard. Let's see, how far was it down at this point against Ethereum?
So this is against
57%.
ETH. So like if ETH did well and Hex did well, then the amount that ETH did well wouldn't be shown on this chart.
Right, because Hex technically can run harder due to the lower liquidity.
Yeah, and that's what we see, huh?
Well, so it's just interesting that what I'm trying to point out here by showing you guys this is like, look at what happens like when you least expect it and the price is doing nothing on this chart, and everyone starts to FUD it and say it's going to zero. That's when you start to get the massive move. And this time, price went up 135% in 7 days and made a new all-time high. I'm sorry, I miscalculated, 200%. And then it just kept going. And this is just the beginning. And like, so then you keep going, you go, this is when Godwell comes in. Look at that. It just goes from, which is already amazing price performance. So then the Godwell steps in and just wicks the price up like crazy. It flattens the entire chart out, right?
Yeah.
You can see as this move happens and plays out,
changes the scale.
It just destroys the scale, right? Because so few people held it, and so many people wanted it. And this is a function of price and demand. And you can see these candles down here now. They're so small. I have to get rid of the moving average because otherwise you can't see them. So that was the first major top, right? And so as I shrink the price down, look at this point. People had to be really bearish on Hex at this point because it was really underperforming Ethereum. Here you're looking at 82% down in 90 days from May of 2020 going into DeFi summer when all the copycats started to come out and people would FUD it. And
you're looking at probably going in between 5,000 and 20,000 participants, or like I would say stakers during that period, huh?
Yeah. Yep. So there wasn't many. You're looking for, as far as adoption rates. I remember there was 10,000 wallets day one, right? And then by now, yeah, you're probably looking at what, 25, 30,000 at best.
Yeah.
And so then we start to get back up. This wasn't even Big Payday yet, if I'm not mistaken. Or no, that was Big Payday. I'm sorry.
Yeah.
This was Big Payday. So leading into Big Payday, people wanted to game the system. This would be the equivalent of like Pulse Chain launching, right? You're going to prices like, all right, it made a nice little run off the lows, triple bottom, ran up like 80%, 100% off the lows, and then went sideways. And then people are like, all right, we're going to game this. We're going to buy the price up and stake it and take our 30% gain the day after the fork, or I'm sorry, after the Big Payday bonus. And that's exactly what happened. It ran up like crazy, made a new all-time high, crashed all the way back down 85% against ETH. Again, people are FUDing it, saying it's going to zero. But to everyone's dismay, there was real demand there for this product. And even though you made a lower high in ETH terms on the USDC pair, you actually got to 2 cents right here. So you made a higher high on the USDC pair, but because ETH was so strong, Hex made a lower high against ETH, right? So then you fast forward. This is when Hex was trading at like 0.6 of a cent, and we just could not get anything going against Ethereum at all. It was just crazy. We just tried, we couldn't get it, and then finally we started to make our moves. And now this is when Hex is at 4 cents, then 7 cents, and 20 cents. Then we go up for the all-time high, and this is when we peaked. Like here we're at 10 cents, then we go up to 56 cents. So now by now you can look back in history and like look at these initial candles and stuff. That's absolutely squashed down to like nothing.
Yeah.
Even these moves look small in comparison. And now look at it, just keeps going and going, and like this is bananas. Like now you're like, this is what I expect, right? So if I zoom out now and I go to a daily chart, you can see where we're at. There's a clear relationship here. If I just draw simple lines, oh, hold on, get rid of that magnet. Bam, bam, falling wedge. Huge breakout. What do you see? What do you see here?
Falling wedge.
Falling wedge.
Start of big breakout.
We're just starting what is going to be a move for the ages against Ethereum. We're talking break the all-time high and beyond. This is how far we exceeded this last all-time high. If I just measure this move, we went 344% off that level. So if you get this thing again, if you do the same thing again, not saying we will. Holy cow. I got to shrink it down. Oh, God, that's not enough either. Dang.
Gotta get new
340.
monitors.
Yeah, no shit. That's kind of what you're looking at. Like, it's going to completely destroy the ETH chart. And this
What
is
level
where,
is that saying?
00073. So in ETH terms, what is that? Let's see. Where's my thing? Converter. ETH. Come on, Nomics. $1.16. $1.16, guys. That's what we're.
Wow.
That's one
Has
of
a
our
nice ring
targets.
to it.
I like it. I like it a lot. So again, time frame subject to change, but from a trader perspective, you've already got confirmation. Breakout, retest, resumption, and no liquidity. No one's willing to sell because there's a fork coming. You got a documentary coming out this year, a video series. You got Pulse Chain launching. You got Matty Allen streaming 6 times a week. It's just endless, guys. You got so much hype. You got Real Meat Kevin finally admitting Hex is the future. You got Ivan on Tech saying he's abandoning CoinMarketCap.
That's right.
It's so bananas. Like, this is going to be the move for the ages. And meanwhile, you have new ETH Genesis whales coming in, bringing in millions of dollars and supporting the price and buying it up.
You do.
And staking it. So it's pretty incredible. If that doesn't get your blood boiling, I don't know what will.
That's right. That's right. We have 440 people watching right now. And thanks to Ballet Brand for the $6 super chat. Thanks, Axis, for all your time spent showing us the charts, and Maddie for streaming and having him on.
Thank you,
My
Ballet
pleasure.
Brand. We always love the good, kind words and support.
That's right.
Hope everything's going good out on the West Coast there, brother. Appreciate it.
Yeah.
Yeah. Was there anything you want to touch on? Particularly, I know we got tons of comments coming in, flooding in. I haven't really been
It's so exciting to see like kind of this historic moment for crypto. Looking back and being able to say probably in the future that this was the time when people had to decide whether they wanted to be in stable coins that aren't so stable, whether they wanted to be in banks that aren't so stable, whether they wanted to take on the risk of cryptocurrency that has 95% dips that are in the game and is the highest appreciating asset class of all time. And, that's really exciting to me.
Yeah, it's one of those things like, I always thought that because I was coming from a Bitcoin perspective. I remember for those that don't know, I mined Bitcoin and Ethereum, took a loan, built a data center, filled it up with miners, did that lifestyle for 4 years, and then found Hex, and then decided to convert all my energy into Hex because it was passive income, whereas mining was a full-time job. And I was like, I got into mining to be a passive income thing, and then I realized that was not what mining was about. It was about burning hot computers, melting, resoldering, chip components, like 89 decibels in your ears the whole time you're in the facility, huge investments, up front to make the stuff happen, to get the miners 6 months late after China already mined with them. I mean, it's a battle. It's such a cutthroat industry. And so I gave that up, sold that position in the mine at the $64,000 Bitcoin top, and moved all that. I mean, I remember I was mining. I bought 8 Litecoin miners for $50 a piece in the 2018 bear market bottom, and then I didn't have them on for like 2 years. And then when Doge went to 70 cents, I turned them on and started printing $1,000 of Dogecoin a day. And I'm like, this is why this price on Doge is unsustainable. And I was warning people in Hex about that back in 2021 when Hex was starting to move from 2 cents to 6 cents. I was like, this is amazing. I'm mining with these Litecoin miners that I bought for $50 a piece out of people that capitulated and then lost the game. And then I was converting that Dogecoin into Hex. So I was adding to the pump, but I knew that this was just crazy, and that there was no way that bull market cycle was going to hold those prices, because some of the prices on the altcoins and the NFTs was just out of control. But I believed in Hex long term, and I knew that there was something to the T-share, and I'd been speaking that publicly for months by that point. And so, long story short, I believe that Hex is the next Bitcoin. I think that it's proven itself now as a safe haven in times of distress, and I think the world is no longer going to be able to ignore it. And that's why I have this chart in front of me, Bitcoin and Hex. And I believe that Hex can go up to multi-dollar targets by next year. It depends on adoption rates and a pulse chain launch. But if those things occur, the sell down is going to be, maybe you come back and sell down to 70 or 80 cents, but you could potentially hit $7 before that happens. That's what this chart is saying. So you could go to $7 by next year and then come back down to test 80 cents or 70 cents of support. And all you're doing is you're just copying Bitcoin's price action on the Hex chart. Isn't that amazing?
That's amazing.
That's crazy. So, and I've seen crazy before in crypto. I bought a Helium network token miner for $500 and watched that thing go from 70 cents up to $55. So I was just like,
Well,
yeah, it's just like, I didn't expect that. I mean, that was a nice little bag, right? But
yeah.
To Hex's credit, I sold that short. I sold it at like $3 instead of $55, right? Because it was so easy to mine. I was like, oh, like who cares? I'll just sell this at $3 for a massive profit. I think I made like $2,000, and didn't hold. But this is what Hex gets you to do: is it gets you to think so long term and to hold. And so I guess with that, I want to add in there that if you're getting into Hex now for the first time, accumulate a liquid position for the bull run, so you do have opportunity and leverage going into the fork. And then after the fork, maybe that's when you decide how you want to divvy up laddering, whether it be laddering, staking long, staking short, having some liquid. I'm not one of those guys that's going to say, oh, you should always stake long, and that's the only play, because it's not. And if you want more detail on how to strategize around staking ladders and stuff, there's tons of content for free online. I know Crypto Coffee has a ton of content on that. Maddie's probably spoken at length about laddering over the years. I'm forgetting a ton of important people that are also out there that are doing the same. But if you want one-on-one, there's people that actually will take you through it, hold your hand, and teach you how to get exposure, especially if you're a high net worth or institutional grade client. Like, to get on the fast track, get safe and secure exposure to Hex. And if you want something like that, that's something that I offer through my website, right, through consultations. So if that's interesting to you, go there and check that out. And then on Wednesday, I just want to take the moment to remind everyone that I'll be streaming with Funding Jim, specifically on that topic of institutional grade adoption, and how, that call to action I spoke about earlier with liquidity providing, and how that's important for us to be good stewards of the contract and to provide liquidity out further into the future so that you can make fees while selling the price up the chart. Like that's important that we start to learn that stuff and not be lazy. And it's literally just the Uniswap app. Click that, go to that website, connect your wallet, and provide liquidity and pay a gas fee, and you're good. Like you just leave the position, and then once your conditions are met, if you have a little bit of patience, you just pull the position and you're sitting on profit, right? We're in an uptrend, so now's the time to do it. Don't do it next cycle when we're going to crash and start setting liquidity higher. Like we're in the uptrend now, so like we're setting the table for big moves up. And if you do need money for short-term, like living expenses and stuff, and you want to sell hex, do it, but sell it to the upside through liquidity, right? And so, yeah, there's so many things that I have in the fire right now as far as content to help people learn more about the blockchain, whether it be, doing courses with Silver the Antidote on Chainalysis or 0x Brennan or Hextronaut. These guys provide these services for free in some cases, some are paid, but there's so many people out there trying to teach you guys how to liquidity provide, how to read the charts. And so for us to be good stewards of the contract, we need to start to understand this and protect our asset and not just give it away to institutions. There's a rumor going around right now that CZ Binance free claimed a bunch of hex and he's been dumping it for a long time, right? There's a rumor. And so like, if that's true, why would we want to give up our coins now at these prices to people like Brian Armstrong or CZ who can come back and hurt the chart and stop us short of our goals as far as price targets? Because they've finally been flushed out now, right? A lot of the poopy horsemen are flushed out. So let's just keep the pressure on the back of the neck of the guys that didn't believe and sell the price up the chart if you need the money.
Yes.
But also understand where this is going long term. Because if you're looking at this chart here, it's saying that we could see $200 hex in our lifetimes.
And I also want to highlight that the reason USDC lost peg is because people believed that it wasn't safe anymore and that the value was less than $1. People had to believe that. And now you've got the flip side where people are deciding how much they believe hex is worth. And that's a question that, if you're a liquidity provider, it's something you can broadcast to the network and it's, verifiable to some extent. And then everybody else kind of has to decide each moment that they're aware of the price, and you hold liquid hex. Like, do you think that it should be more valuable than it is today? And that's, I think that's what we're seeing. We're seeing people valuing their hex more than the dollars in a bank account that they can trade it for today. And so I think that that's going to be really cool to watch.
The other thing too with that is if you really understand and believe where this thing's going, 100,000 hex now might cost you $7,000, but at $1, you've 10x your bag, and you can roll that. Like if the dollar is the base price that we're going to create support on in a couple of years, well, if you got 100,000 of them at 7 cents, you could just restake your $70,000 on a 180-day or yearly basis or 90-day basis and get meaningful yield out of the system, right? Like you need to reframe it. It's called the epochs. That's what happened to Bitcoin is there's complete new epochs of price appreciation when something goes through a massive price expansion like that. So what might cost you only $8,200 right now, you only make $386 for staking it for 180 days, but at $1, now all of a sudden you're making $4,700 every 180 days, which could be enough to just help people, like that's to help you get rid of debt, help pay for gas and food. Like this is going to become a system that people can help. It'll help them get by in life and make their life easier. Like once the prices are set, and there's too many institutional grade people that want to get exposure so that they can add a couple zeros on here and do it at $1 and make $474,000 in returns on a $10 million stake for 880 days. These are the guys trying to take your bags right now. And these are the guys that I want you guys to respect them, welcome them into the economy. This is going to be the hex mining economy, right? We're mining time itself. Shout out to Time Pays Me with Maddie ALLin. This is what's up, though. This is like where you need to reframe your mind, because once this epoch is set, you could be ahead of it. You could be forward thinking about this and be preparing for this by accumulating a liquid bag and then leveraging this liquid bag on 2 chains, because once the pulse chain's live, you're kind of in a position where you're like, okay, do I want to buy pulse hex or do I want to buy ETH hex, right? And you're kind of going to have this battle of like, I don't know which one to DCA into, or maybe they're going to oscillate at different prices within homeostasis. I know there's a good argument for that they'll find an equilibrium, whether that be $1 to $1 price, or whether it be $70-30 price, or whether it be 30-70, or whatever the ratio may be. I think we got to factor in what the gas prices are going to be on both chains. Usually the slower, more expensive money costs more. That's true of gold. Like gold is slower, heavier, harder to move across borders, and silver, it's a little easier to get, a little cheaper. You know, I know, shout out to Funny Jim, he just sold a bunch of silver for hex. Like, it happens, right?
Nice.
You know, the point is that Bitcoin is slower, more expensive, and it's got a valuation of $20,000+. Ethereum went from being worth 40 cents at the bottom, all-time bottom, to now 1650. And yeah, it's slow and expensive, and pulse chain is going to come. It's going to be faster and cheaper, but you got to factor in that sometimes the slower and more expensive monies hold value long term. And so don't discount eHex, and don't think that there isn't opportunity on pHex, right? So, but you can avoid all that mess by just getting exposure to hex now. And if you're an institution level guy, you really have your work cut out for you, because there's literally only like a couple $1 million of liquidity on the books right now that you're actually available for market supply. So in order for you to accumulate a meaningful amount, you're going to need to convince OG hexagons to sell their bags to you, but you're not going to get it at these prices. You're going to need to push the price up to get it. And that's okay, because your target should be get all your millionaire buddies in and buy the bags at 20 and 30 cents, and then fucking send the price to $1, $5, watch the retracement come back down, support it at $1 or 80 cents or whatever it's going to be on either chain, and then start reaping the benefits of the contract by staking these things at higher prices for short to middle terms, and use it for what it was meant to be, which was a time deposit.
Yeah. Beautifully said. Beautifully said. And shout out to Nikki B. Thank you for the $99 super chat. You rock. Gregory Manarino interview tonight with Discourse Syndicate is a big deal. I totally agree. He's got a big YouTube following. Maddie and Axis, stream late so you can raid. Good work, you two.
What time is he coming on?
In an hour.
In an hour? I was hoping to maybe wrap this up in 5 minutes. Shit.
Well, Johnny Chaos, you're being called to the screen.
Yeah, Johnny, get on here so you can take my spot, because I gotta probably wrap this up pretty soon. I've already been preaching long enough. It's time to pass the baton. People are getting tired.
Johnny and Funding Jam. Let's get get you guys up here.
If you guys come on, I'll stick around. But if you don't, I'm calling it in 5 minutes. So get in here.
All right. Ooh, wow, that's a good deal.
A huge shout out to everybody in the chat. Really appreciate the support. Maddie's the one guy that's been here supporting this thing publicly for the longest and the heaviest. So big props to him. He's an amazing actor in the system. Appreciate him.
Thank you. My pleasure. That this community has something that other communities don't, and that's people who have proven that they're going to stick around for a certain amount of time. And we've gotten to win together so far, and Axis and I have been able to meet up at probably 2 or 3 times already on our 15-year journey. And so there are so many amazing things to come, and whatever you can do to be a part of this ecosystem. And today you guys are here watching and learning from us. Axis and I have probably both been in crypto at least 6 years. I've been in crypto 6 years. So we've been learning. So in 6 years, some of you might be starting your YouTube channels, or, going live during historic moments. So welcome.
Dude, shout out to all the guys that showed up in the last 8 months. Like, I don't know, let's just name drop Corey Costa, RH Max, Furu Finance, shoot, I saw you guys doing this the other night. You guys were shouting.
Ben Dubard.
Gifford Ware came out more publicly. Crypto Sloth came out during that time frame.
Fashion Coder.
So many good ones. So many good ones. And they were like when everything was down too. It was like that was the best part.
Nikki B coming in again with another $100 super chat. Gary and Johnny, get in here. Okay. Well, I texted Johnny the link and I sent it to Gary on Telegram. See if either of them gets a chance to get in here. Hey! Oh, wow. Holy moly, look who we have here, Johnny Chaos.
All right.
Johnny Chaos, brother.
How's it going, man?
Good, man. Glad that you came. Seriously.
Yeah.
No, I was really enjoying. I like to watch and listen to what other people have to say. Usually when I show up, it becomes about me, and I like to learn. You know, you get you got two ears and one mouth. You know, when you're talking, you're teaching. When you're listening, you're learning. And I like.
I'm curious about something that we may differ in opinion on that would be a really fun conversation for the community to listen to, which would be this idea of the when and the if of a forced parity of E-hex to P-hex. Because I agree with you from the perspective, I've heard this a lot from you, which is that you believe that the OA will force parity. And I think that that's a very real possibility. I'm not sure of the timing of it is all. I'm not sure if that happens immediately or if that happens over time. I think just to set the table, I think the way that I would envision it is the OA lets the market decide where the ratio sits, where harmony is going to be between E-hex and P-hex, and then he will lock the liquidity. But I would like to hear your opinion on that.
Well,
by the way, welcome, Gary. Thanks so much for hopping on.
What up, Gary?
So
yeah, I'm very curious about Johnny's position. I know that there's been some controversy about it. I'm really looking forward to what he says.
Yeah, so first of all, you have to understand, I'm not telling you what's going to happen. I'm telling you what's to watch for. Okay? Not what is going to happen for sure, but what to watch for. And the reason for that is because the OA has a lot of dormant capital that is not being utilized right now. And when the pulse chain fork happens and the exchange opens up, a ratio has to be set then by the person setting up the candy store. Regardless, it has to be set up. And the ratio currently right now would not make any sense for hex to be 1 hex equal 1 pulse. So 1 hex has to equal a multiple of pulse from day one. Otherwise, you would have 10-cent pulse day one, wouldn't you? Mm-hmm. Because if 1 hex could be traded for 1 pulse, wouldn't everybody trade that out, right? So the idea behind this is to utilize the dormant capital in a way that's not selling it to support the things that matter most. That's the idea of it, because it's not being sold. What it's used for is because what gives something value is the ability to exchange it for something else, and how many of those something else's you can exchange it for. That's actually where value comes from. And that's what people don't understand. They don't want to relate to. What is the difference between a $100 bill and a $20 bill that's printed on the same paper? The difference is the number, right? Mm-hmm. And the fact that it has an accepted value at that ratio, that $100 bill is worth 100 of the other ones. And the same thing with hex and pulse. 1 hex will be worth a multiple of pulse from day one. And what happens if those liquidity bonded pools are very large? If they're very large and nobody can change that ratio, what happens is you have a set ratio, because in order to change a ratio from a 1-to-1 to a 2-to-1, you have to double one side of the liquidity. You have to have enough coins to double one side of the liquidity. So I know that the prices have to be set day one to a certain to a certain multiple, because it wouldn't make sense to set it at 1-to-1. So it has to be some sort of multiple. So I think this could happen sooner than you think. And the other reasons for that is, for one, you don't want people to dump their Ethereum side, right? Well, one of the ways to keep them from dumping their Ethereum side is to go ahead and put that pool. And I see Maddie smiling, and I know what know what he's thinking here a little bit too. We did not see this. We didn't see this on the other pairings, right? On the other forks. And there's actually a very logical reason for that. And the logical reason for that is that was outside of the sphere of control of the OA. That would require real hex from the Ethereum chain to be bridged over that could possibly be stolen and dumped on the market, endangering the ecosystem, because it was out of the sphere of control of the OA. If you have the ability for $0 to use things that you already have laying around to set ratios that are going to be beneficial to your baby and preserve the value on the other chain by creating a bonding between 1-to-1, allowing a universal conduit between two bridges, and it's completely under your control, under trusted bridges and trusted liquidity pools that you are in control of, why wouldn't you do it? What are you doing with those coins anyway? So that's kind of the question.
What a timely time too, right? When we're talking about really just about base ratios, and also about, you know, in the terms of like who's sacked for pulse and pulse sacks, and who's holding liquid hex relative before the fork, but also in terms of the OA's most recent move to corner the market and die, and also the depegging of USDC, that really kind of proves that all this stuff really is just beliefs, right? And what people are willing to hold.
Yeah, the Ben DeBar made a statement earlier on stream that Walrus and Gary was on, and he was talking about, well, could the OA use the die pairing, to create a stable conduit? And I'm going to say no on that. And the reason I'm going to say that is because that creates that same situation where possibly something could go wrong with die, where they could mint infinite coins, and then that could endanger the whole entire ecosystem by the OA taking such a brave step to try to do pairing in a sphere that's not within their control, right? Because they can't change that code. They can't, they might own a majority of it. They could create a solid liquidity pairing, but is it necessary? Because if you pair hex up 1-to-1, you've created a universal conduit between chains, and you have now stabilized the Ethereum pairing. Also, you allow the OA to remove hex from the market on both chains, because if you're trading within that pool, you're able to remove hex off of both chains by the trading pairs, right? And the other thing is, what is hex's purpose? Hex's purpose is to be the yield producing asset, right? It needs to be the premium yield producing asset. And a lot of people are thinking, well, I don't like that. I don't want the OA to do that because that's going to screw up liquidity pairing. And I want to be, well, first of all, it's going to create stable pools, because if it's the most liquid pools, as Richard has claimed, you will have the most liquid pools on PulseX. That creates very stable pools. Now, the yield will not be as high because it would be diluted by the OA, but they would be very stable pools that would allow you to pair your hex up and match the OA's move, allowing you to earn hex from both chains. But since the pools are so diluted, hex does not lose its value as being the premier asset to earn yield, right? So it works both ways for both reasons. It supports hex as the premier store of value, productive store of value, and it creates very stable pools for people not to have impermanent loss, because one hex is one hex no matter which chain it's on. And the arbitrage should take care of the rest, right? If you can buy a gold coin for the price of a silver coin, you'll buy the silver coin and trade it for the gold coin. Okay,
we
I'm
see
done.
that relationship. We see that relationship with the gold silver ratio. So like in the example of gold and silver, when gold is usually the first to run, and when it runs really hard and really fast, and it leaves the silver price behind relatively. And then once gold is worth so much more than silver, silver makes its move. And
Yeah,
so,
and I don't expect them to always be the same price. When I say parity, I mean relevantly within a range.
okay, that explains everything then, Johnny. So like I agree with you. I think that they'll have a homeostasis where they'll oscillate
Yes.
amongst each other at a certain range of ratio to each other, and that if so that they are tied together, they'll move up and down together, but they can vary in dollar price relative to each
Well,
other.
to an extent, because like I said, if you could buy the gold coin or the silver coin and you can trade one for the other, that's going to create the arbitrage situation where they're going to move very closely. But again, it's two different ecosystems, as where if the east side dumps, there's going to be that arbitrage opportunity to buy up the east side in order to move it over. The other thing is how wicked it's going to be as far as the design of Hex to support this fork is the fact that it's such a self-balancing system to begin with, and the T-share rate will, you might want to go over to ETH. If everybody decides they're going to migrate and unstake their hex on the Ethereum side and move it over to Pulse, what does that do to the hex per day per T-share? Insane, right? And then if that pairing is still there, it's so self-balancing because you'll be able to use that pairing as a conduit to trade, right? So it's two ecosystems that are going to draw each other up. Because of the way it's designed, it's actually very well suited and balanced. I don't see how it's not going to be very closely related, because of the people are going to see the value in both.
So I have a kind of a cool chart to show as an example of what that might look like. Granted, this is a different assets that we're comparing to each other, but I just kind of want to, I had to pull this up because it made me think of this.
Yeah, I would like to point out that Johnny changed my mind on this ever since this whole depegging, and then hearing him talk now, I think I finally get it. What do you think, Gary, about Johnny's hypothesis?
So I'm still in the listening, and prediction doesn't really make a difference to me about whether one's going to be more popular or not, whether there's going to be migration. I mean, these are conversation bits for content creators and for people to kind of, speculate and be engaged, the speculative stickiness about what's going to happen. So Jesse has his position, and he talks about that, they're different products. They have different, representatives. People that migrate over initially for Pulse Chain are likely 3 years of history, Hex, Richard familiar, narrative familiar, situation, and others will be pulled along because of the opportunity, right? There's opportunity of a new L1, opportunity of a DEX, and it doesn't really matter about Hex or Richard when there's opportunity like that, right? So like I can see the self-balancing elements of the protocol of Hex playing very well on both chains. Like Johnny was saying, for a while people were saying, oh, well, when my stake comes due, I'm not going to restake on the ETH chain. And because I'm not going to restake on the ETH chain, I'll either exit out in price to spend it on lifestyle, or I will migrate that economic energy to a less transaction cost L1 of Pulse Chain, right? And restake over there and try and capture, at least a price difference of a T-share on Pulse Chain initially won't be the same price as the T-share on Ethereum, even on launch. So like I can see the reason for these protocols to oscillate on the staking reward, reward to stakers versus, is it a higher percentage of stakers on Pulse Chain? Probably. Like they had experience, they saw ROI, they saw that the code was proven, over 3 years on Ethereum. Why wouldn't you likely have more stakers there, right?
Mm-hmm.
Narrative gets reinforced, marketing gets reinforced, the threat of S-load and things like that are not looming, the same way on price. So I could see the reasoning there. And, it's interesting that for 6 months or maybe even a year, big payday was being talked about. And the idea was you're going to be able to 3x your stack, because you're going to be this one smart person that heard that one stream that one time about the opportunity of 3xing your stack, and nobody else is going to do it, including the OA. Right? So when this OA jumped in and used the protocol just like everybody else can and played fair, fair play, even though people didn't like it, they're like, oh, I was going to get 3x and OA was going to be left in the dark, because they don't pay attention. They didn't watch the same streams. Like, I don't think that's going to happen. I think that, the reinforcing.
Who got punished in that scenario, Gary?
Nobody got punished.
No, but I mean, really, if you really want to think about it, who got punished in that scenario? It would be the people that were trying to think short term and jump ship. And that's why I'm explaining my theory, is because if you are trying to dump your Ethereum hex and jump over to Pulse, you are going to get screwed. That's why I'm explaining this, because it's a similar event like the big payday event where certain parameters can be utilized. And if you think that you're going to outgame the system by jumping from one to the other, that's what I'm trying to tell people, to be observant to what these liquidity pools can do, so that you're watching for this. So if it does happen, you know better. Imagine if you sold all of your Bitcoin for Bitcoin Cash at the fork. Imagine you had done that. If you had kept them both, you would have had your Bitcoin and your Bitcoin Cash, and you would have won. Okay? If you would have sold your Bitcoin Cash for Bitcoin, you would have won. But you had a 50-50 chance of losing your ass by making a choice. What I'm telling people is, you might not want to make a choice. You might want to keep both, because that has the most potential for winning. You can't lose if you keep both. You just have a 50-50 chance of whether you win harder or you lose, right? So, I mean, people are going to do what they're going to do, but
I like that also, because the win-win element. Even early on in 19 or 20, when Uniswap pools became available, and Richard made more commentary about impermanent loss, and there's a lot of liquidity on USDC or in Ethereum pools, but they're taking the risk. You don't need to, you can stake and generate yield, like all those narratives, right? That marketing has held up well over the past 3 years. And so I can see that, the ratio of participants that hold in a wallet hex versus staked, maybe that isn't as appealing as the designer of the product would like. So I can see the narrative both to say you're not losing because you hold Ethereum in stake, and when that stake comes due, maybe there'll be less load on the Ethereum chain in the future because of sharding or whatever else that they want to promote. If they're happy to do that, right? So he's not going to tell people, and no one should consider, I don't think they should ever consider EES. But if they basically are waiting it out and they say, okay, now my stake is due, and now there's economic reason for me to unstake or end stake, then naturally, then they have that decision available to them. And if they have examples of others that have walked across the bridge and now are playing in the LP because they want to stay liquid, right? They're not losing, right? Like you were saying about bonding, it doesn't necessarily have to be the OA. It can be enough participants.
Yeah, it could be a whale.
Right.
It could be a whale that just wants to provide a stable liquidity pool that allows you to earn hex on both chains. It could be a group of whales that decide, hey, we want to preserve hex on Ethereum, so we want to create that universal conduit. But if the OA were to put it up first, and create a large pool, like I said, that would be a stable pool that you wouldn't have to worry about impermanent loss, because heads you win, tails you win. You're going to get hex. You're going to get it on one chain or the other. And in that mass quantity of that migration between chains and switching back and forth, that's going to be large quantities. So, if the OA doesn't put up those pools, they're not going to be stable, but the yield's going to be stupid high, right? It's going to outperform hex staking ridiculously. But there's risk because you may end up with the other hex that you don't want, right?
Yeah.
So,
and that's one of the things. Again, I think his branding is going to be hex is hex.
Yeah.
And so, it's in the Bay Area, you can take the 101 or you can take the 280 to get to San Francisco from the South Bay, and they're totally different experiences. They're pretty much the same distance, but they're totally different experiences because the 280 is newer. The 101 has been there for decades. And so, like, the experience is different, but they're both, you can take your car and choose which one. Now you have two cars and in this forking element of your hex on two different chains. But I think that there's still going to be some decision making where people say, I realize I have two cars. I have a pulse chain and I have an Ethereum hex, but there's probably better use of my cars or my economic energy to travel this one path. So I think that, in my opinion, it'll be more, you're not losing because you're on Ethereum. You're migrating, when you choose to migrate, when your stakes come out, when there's economic energy reasonable to do so. Even when you're playing the LP game, like in the past, couple of months, I've played a lot of LP for Hex and for Ethereum and such. And, I saw that to move your liquidity on V3 was like $300 or $400. That's just to place or pool. And, if you have that as a transaction cost every time you're trying to catch, that little window, I think it's just going to be better marketing across the board on Pulse Chain. Whereas there may, until there's 0x and there's TrueUSD and things like that are available on Pulse Chain directly as a fiat bridge, then, we still want to encourage Ethereans to have the same experience, the same kind of benefit of experience.
There's a point that I want to make about just this whole idea of parity. I wasn't, I think, giving it a good consideration until I saw something that I had never seen before and lived through this past weekend of USDC depegging. And so when I think now about the idea of what Johnny is saying and others are saying about this idea that EHEX and PHEX could end up being bonded together at a particular ratio that it, creates the greatest incentive for the largest players and everybody else, in fact, that it could be a win-win situation. And I really wasn't considering it because I was stuck on the idea that parity means 1 for 1. But I think that even if it's not exactly 1 for 1, if we're thinking it's not going to be 10 to 1 or something, then that totally changes the equation for me and really helps me understand, just like I saw, a market maker, the Pulse Chain and PulseX sacrifice addresses over the weekend decided that, one DAI should be valued closer to 1 USDT. And that played out over, buys that then made it true that those coins became bonded again. And the, so the origin address or sacrifice address or whatever you want to call it, Greg the Duck, made several $1 million over the weekend by just
7 actually as of this morning.
Buying the panic.
7 million.
Yeah. by bonding those prices together and saying, that a DAI should not be 10% less than a USDT.
Yeah, so here's what it takes. Here's what it takes to literally create that pool with just now. There's different ratios for different things. Okay, before the bridge is in place, there are coins that do not exist yet, and those ratios have to be set day one. Okay, how stable those ratios are is based on the size of the pool. Okay, now there are 650 billion hex. We know the OA owns a majority of those. We know there is a small amount that is actually in circulation. In order to maintain a 1-to-1 ratio between EHEX and PHEX. All the OA would need to do is take 10 billion and 10 billion, and then nobody can move that ratio because there's not 10 billion coins to change that ratio from a 1-to-1 to a 2-to-1. There's just simply not, if it decides so to do so. Okay. It could literally lock it. Now, what does that do? And this is one of the things that people are bothered with, is they're like, well, I don't like that because then Hex can't move in price. That has absolutely nothing to do with the price of Hex. What has to do with the price of Hex is its other pairings.
Mm-hmm.
You can liquidity bond two things together so that they move together,
Mm-hmm.
but their ratio to USDC and liquidity bonding there can be very thin and allow slippage to the upside. That has nothing to do with what I'm talking about, creating a stable bridge between chains and creating a stable liquidity pool for liquidity providers to not have impermanent loss and earn Hex on both chains and allow the OA to remove Hex from both chains. Has nothing to do with that. Now, the other part of that is Hex's pairing to Pulse. Everything will have a pairing to Pulse on PulseX, okay? And that ratio also, because again, the OA has a large majority of the coins, if they wanted to put a pool of 10 billion to 100 billion Hex to Pulse, you would have, that 10-to-1, okay? So right now, if you look at apex.win, all right, you're looking at 1 Hex is equal to like 300 Pulse, okay? And that is an example. It's not realistic. We won't know what that pairing is going to be, but it's going to be some multiple of Pulse to, if you wanted to look at it this way, you said, okay, well, Hex is 10 cents. Let's say Hex is 10 cents. So how many Pulse equal 10 cents on day one? That's what your pool is going to be. How many Pulse equal 10 cents on day one? That's what that pairing is going to look like. Now, how deep that pool is going to be based on what the liquidity is provided with that, okay? But it's going to be a multiple of what Hex is. Now, what does this happen? What happens if the pool is really large? What happens if the pools are really large between Pulse and PulseX? Well, if Pulse is 200 Pulse to 1 Hex, Hex gets a 200 times multiplier. You get that? If the pools are really, really, really large and Pulse moves a penny, Hex moves $2. That's crazy.
But how can Pulse move a penny when it's so huge?
Well, but I'm just giving you an example. Hex having that ratio to Pulse, it gets a 200x multiplier. So that was just an example saying a penny.
We can actually pull up real live examples of like this happening in the history of cryptocurrency and the ETH Bitcoin pair, like how they're in a relationship. Because if Hex is a store of value and Ethereum is the oil, if Bitcoin is a store of value and ETH is the oil or the utility or where all the things get built on top of as the Gen 1 and the Gen 2 cryptocurrencies, if Gen 3 and Gen 4 is Hex and Pulse, we could go back and we could look at what actually happened with ETH and Bitcoin and kind of see the returns that they created just as a preliminary baseline for what's possible.
You used to be able to get a lot of Ethereum for 1 Bitcoin, and now not so much, right?
So
Richard
it was
points
2,000
out all the
Ethereum
time.
for 1 Bitcoin, right? So again, if you're going to make that reference, you had a 7-year lead with Bitcoin on economic perception of value and storage, and then you had a launch in an ICO basically of Ethereum, 15 million BTC, 2,000 BTC per or whatever, 2,000 ETH per BTC kind of ratio. And all I'm saying is, as new economic energy came into the system, how did they do it? Did they do it through ramps of I've got to buy Bitcoin in order to get Ethereum or all the derivatives of other coins in the cryptocurrency universe? Like it was always a path. Bitcoin was the path.
No, so here's what happened with Ethereum, Gary. In 2017, everybody was buying Ethereum. You know why? Because it was ICO mania. So they would buy Ethereum regardless of what the cost was, because $100 of Ethereum was $100 worth of Ethereum, and then they took that $100 of Ethereum and they took it to the exchange and they bought the coin that they wanted. So they were buying Ethereum spot without thinking twice about it, ignoring Bitcoin, because you weren't exchanging the Bitcoin for the ICOs, you were exchanging the Ethereum for the ICOs. So the ICO craze in itself is what really amplified Ethereum taking its position on Bitcoin, because it was the easiest thing to use to get to the endpoint that they wanted to go. And the same thing very well could happen with Pulse. But like I said, because of the pairings and the parities, we've not had a situation where somebody actually is setting up a whole entire new ecosystem and they're setting up the candy store from day one.
Mm-hmm.
That this is not something that has happened before, and people are not going to like this. This is why I don't like really discussing it all that much, because there's going to be so much garbage about this, and how mad people are going to be, because whether you like it or not, the ratios are going to get set day one. And they can be set very heavy or very light, depending on the will of what people want to do. And there's not anything anybody can do to change that, especially with the quantities of the coins. And people always bitch, well, why do you need all these coins? Exactly for this reason. Exactly for this reason is why you need a benevolent person to have this position, to have this amount of coins in order to do it.
Mm-hmm.
Benevolent Duck. We've got some chart candy on the screen.
Yeah,
the ramp works for everything that's ERC20. Is that as the current Pulse ramp? Is that every ERC20, or is there some gating about what can and can't go through the ramp?
I guess you're asking. I don't know what you're asking.
So
I think that there were some examples used, and then they tested it for a little while, and then I think they shut it down. And it should be compatible with everything.
Well,
but
I remember using it at least in the first versions of
okay.
basically you've got your coins and you can move them across an ERC20 and Pulse ramp as far as getting into the test net. But my question is basically you had to convert economic energy into BTC, and then all of the ICO, which was Ethereum in 2015, sure, but I didn't know that world. I knew that world in 17, and then the value proposition of Litecoin was, look, you can get there faster, and you're trying to get in this ICO or get on this, foreign exchange or use a VPN and blah blah blah. So all the time lag. So that's why Litecoin as a path became popular. People were buying Litecoin because Ethereum or Bitcoin was too slow.
Bitcoin was so expensive, and the mempool was getting clogged. I remember that.
Yeah. So I'm just
example,
asking from like a routing path.
Yeah.
Just speculating.
This is great conversation.
Could Hex serve the role of Litecoin?
Yeah,
I think so.
As a
what's happening, and that's why I have those price charts that has us going to all-time high by May, is because you already came down on the same. So when Hex launched, it dropped like 99%. Some of the charts said 97.5%. So you basically redid that chart again. I'm going to jump around a little bit here to bring this point home. This original drop was 97 to 99%, and then you rallied up, did it like I think it was like a 10x move off the low. It was, oh wow, that was 8,000% off that low. And so the theory here is that when you got the 96.5% drop now, you could be seeing, like, if you did it again on the same liquidity parameters, you're looking at, like, again, that $1.16 to $1.50 range, because nobody has Hex when you're talking about 9 million wallets on Ethereum. Nobody has it, right? It's like, okay, there's 300,000 holders. Maybe the same guys hold 3 wallets, so you really only have like 100,000 holders. You know what I mean?
Yeah.
You really don't know, but you can assume that just nobody has it, and everyone's going to chase the green candle with that adoption rate increase. So yeah, I think Hex is the method by which you get exposure into Pulse Chain if you don't already have SAC money in the gate. And so yeah, you're going to see again this massive move that's coming. Here's your couple resistance levels. The 786 is at 16 cents, and then if you can get above that and push off higher, I mean, that's next stop is the all-time high. And then if you get a speculative mania off that, going into mainnet, those higher targets are possible, right? Because of what Gary and I are going to talk about on Wednesday is the institutions that are trying to get exposure that can't, and they're begging you guys to dump the price because they do see that once EHEX is dollars, that there is meaningful yield that can be gotten now at 8 cents that won't be able to be gotten at $1. So everyone's trying to front run this move, and everybody wants the cheaper price, but nobody's going to get the cheaper price. So they're going to have to convince OGs to sell their hex at higher targets. Okay, so now that I got that out of the way, let's go back to the ETH BTC chart. Again,
We're gonna have to do a lot better persuading Axis because they ain't getting mine.
Everybody hit the like button right now. We might be able to get over 500 live viewers. And we got Gregory Manarino going live with RG3 in about half an hour. So this is a perfect lead up.
Okay. So in the beginning, there was, I think it was 2,000 ETH per BTC. And then from the all-time low, ETH went up and did a 2,200% move against Bitcoin, and then retraced, and then did another 1,900% against Bitcoin. But the difference was back here is that there was no liquidity bonding in the same way, because everyone was more USD denominated back then. Whereas like right now, we're seeing for the first time ever with these bank breakdowns that people are now starting to value sovereign crypto as a safe haven. And I think we're in this position now where we're at the tilting point where people start to value things in terms of cryptocurrency instead of in terms of dollars. It's a little bit optimistic maybe to think that that's just going to happen overnight, but that this is the beginning phases of a 10 or 20 year process where it's up to us to essentially trade these things back and forth and no longer use dollar denominated things. That's a whole other conversation piece, but so here we got the ETH BTC chart. You've seen this crazy move up. If you get the situation where EHEX is bonded to PHEX, meaning that Ethereum hex is the liquidity you will need to get exposure on Pulse Chain before the bridge goes live. That's like
universal conduit.
Correct. It would make sense for once the bridge does go live that wrapped EHEX is paired with PHEX on Pulse Chain and wrapped PHEX is paired with EHEX on Ethereum to bind their liquidity together so that they begin to move together up and down at a certain ratio. And so I have another chart that can kind of try to explain that relationship in a similar way with new assets, right? So
but what's funny about that is the OA doesn't actually have to bond it on the Ethereum network. That will follow suit. He only has to bond it on the one side that he has control over. And the other will follow suit, because people will want to arb that because they know that pool's not going to move. So that's what's really interesting about this is it doesn't take twice the capital to do it. You only have to set the precedence. Once that precedence has been set, the community itself can keep that alive. And that's where the real advantage comes in there.
Well, my whole point with that was just like if they do decide to do that because of how big the stack is, yeah, I see the whole point of that you're making of he has full control of the OA has full control of that other chain, whereas on Ethereum he doesn't, and so he doesn't maybe want people to arb both sides. But I think it would just strengthen the bond. I think is my argument. Not that he will do that, but that's a possibility that
the community will. But the community will. It will probably not be as deep of a pool, but the community will because they will be incentivized to do so.
So that will be interesting to see. But so then I was thinking to myself, like, okay, so where do we have an example of this like now that we could actually key off of? And that is in the ICOSA Hedron pair. So like when you compare ICOSA in terms of Hedron valuation, these two, like the only way ICOSA comes into existence is if Hedron is burned. And the only way Hedron comes into existence is if there's hex stakes, right? So it's everything ties back into the T-share. But again, when they're valued against each other, you see this relationship where they take turns oscillating amongst this 120 to 150% range, but generally they're staying trapped inside of this range. So there's going to be times where EHEX could be, 80% overvalued to PHEX, but then it comes back down to meet the median line at 40%.
Yeah, but Axis, it's still not direct bonding. So it's a good example, but it's theoretical because it has to do with the mechanism of the burning. And so it's like algorithmic stable coins versus backed stable coins. It's kind of, they're different things, but they do similar things, right? So what I'm talking about is direct pairing in the liquidity bonding. And you're talking about some of the mechanisms that are producing a similar effect, if you get what I'm saying. So I wouldn't be as dependent on the algorithmic to do what it's supposed to do as direct liquidity bonding, which basically just says when you're direct liquidity bonding, all you're saying is this thing is worth this many of these things. And if the pools are big and you can't change one side of the pool, that's just the truth. There's no arguing that. There's no way to change that unless you have enough coins to change the liquidity pool. That ain't, there's nothing you can do. And if more people come in because they see it's a stable pair, that liquidity gets deep because everyone's like, oh, that's a stable pair. So
the part where I struggle with that is like, you know, PHEX is going to launch with at $0. Like it's going to have no dollar value. And so then like just based on the function of all the liquidity on the Pulse chain being basically 10,000 times, meaning
yeah, but that's where it confuses people because it doesn't have zero value.
Well,
it
no,
has,
I know that.
Yeah, it has zero.
It
has zero market value. You know,
the price should theoretically launch
at zero price, but it has
price zero price day. But the second that first price is first, the second somebody buy, it's like having a table full of stuff for sale, and you haven't sold it until somebody comes by and goes, "I'll give you $100 for that." Starting price could be $100.
Right, but
the first price sold could be $100.
My whole argument is like where. So so let's say we have a run up on EHEX, we're leading into the fork, right? And whatever the price ends up being, let's say it's 20 cents. Then the fork occurs, and who's going to make that first buy to get PHEX to 20 cents?
Oh, well, it doesn't really work because the pairings are going to be made. All the other pairings are transferred. There's a couple coins that don't exist yet that those pools have to be set up. Okay. Everything else is going to transfer. And this is where you get into routing. Okay. Routing is instead of pairing Hex with USDC and Pulse with USDC and Pulse X with USDC, you pair Pulse with USDC only. Only one of them gets that pair. And that creates a routing. So in order for you to get to get a dollar value, it all routes back through that one pair that has that liquidity that can be removed to the other chain. So you create a routing. So like, you know, when you do a Uniswap, you see how it goes through all the different pairs and stuff. So instead of splitting up your capital,
like in current times, if you wanted to make, if let's say you sat on a shit pile of Ethereum, and you wanted to make like a $10 million Ethereum market order, it's still going to route some of that order through the USDC pair because it's going to find you the best price amongst the spread of all the pairs.
Yes. So what you do is if you're setting up the liquidity pool, now some of these liquidity pools are already going to have the stables that are imported that aren't going to be worth anything. So there's going to be chaos in this. You can't control.
There's going to be Johnny Chaos in this.
Yeah, you can't control all the chaos that's going to happen in here. But what you can do is you can focus on the pairs that are important to you, create the correct routing, create the right size of the liquidity pools so that they all benefit what? Why is Pulse being created anyway? It was to benefit Hex from day freaking one.
I do believe that the goal here is to make Hex on Pulse chain the underlying asset, even though it seems like Pulse would be the underlying asset under these conditions. If they are met, all things will be routed through Hex, but there's a lot of buts there, right?
Oh, there's tons of buts there, but the idea is just remember that, you know, this is what people need to understand is just that when you pair something, that what gives it value is how many of the other thing can it be traded for. That's what gives it value. And that's what you need to be looking at when you're looking at the ratios is how many of these things can it be traded for. And when you realize if the pools are large and this is 200, that means this other object that you thought was the one that wasn't going to out, because everyone's like, oh, Pulse X is going to perform and Pulse is going to outperform or Hex is going to outperform. Guess what? They're all going to pretty much move together. Because if the pairing's set up properly, they will move up together. They'll benefit from each other's features. As a result, they will be exchangeable for X amount of Pulse.
Yeah, I see that. I see this effect making adoption so much more important because what it would do effectively is it would squeeze this down like this. Like
Uh-huh.
pulse chain isn't going to perform that well against hex in that case because
No.
everything would be tied through hex. So the actual real returns of the ratio between your pulse X, and your hex, they're not going to oscillate as much as ETH and Bitcoin did in the early days because they'll be more tightly tied together. And the only thing that they'll perform well against is all together like a tripartite. They'll all increase against the dollar in this conditions.
And what I like to describe it as a train, and you got a car. Each car has like a multiplier, and it's all related to pulse. So when the caboose or engine moves, it drags the whole train along with it, and it pretty much stays stable as where each train has a multiplier. This coin is worth this many pulse. This coin is worth this many pulse. This coin is worth this many pulse. And if the pools are large enough, that should stay pretty much stable. And when people buy into pulse, it moves the whole train along.
So can we talk a little bit about, we'll switch gears here a little bit and have a discussion about adoption as far as hex staking. So what I mean by that is, let's say there's an instance where this is assuming something. I'm gonna make an assumption here. Let's say there's a scenario where pulse hex is cheap. And what I mean by that is it's a penny or 10 cents or pick a cheap number that's not dollars. Okay. If pulse hex is cheap, it makes sense for people to go find value there and stake there, thus increasing the number of stakers on that chain. And then the arbitraging of T-shares becomes more of a thing, right? So this is assuming that that what you just said isn't the case, right?
Right.
Not to say that it won't be, but just to say that for the sake of a discussion, we're going to assume that P hex is cheaper at a ratio than E hex. Two things I see happening in this type of a situation. Every day people are going to go to pulse chain. So that means that adoption can skyrocket over there because you have P hex more available for a cheaper price. People can stake more of it and they can acquire more T-shares, thus diminishing the T-share return because there's more T-shares in the pool. Versus on E hex where perhaps E hex is more expensive. There's less T-shares in the pool every day. Gas costs more over there. So it's kind of like a wall or a gated community that's protected by this high cost of use. And then maybe those T-shares become less and the yield gets better over there. And then even though as much as you might try, the arbitraging thing becomes less of a thing. It just becomes two separate ecosystems in that the OGs kind of, I should say the Genesis ETH whales find their own way to find value and yield in EHEX, and that's its separate ecosystem versus PHEX where you might get way more adoption, way more users, but then the T-share pool gets diluted. You know, ultimately, maybe this is something that the OA thinks about, and then maybe the OA tries to strategize around that to try to create.
I just told you how he gets around it.
So we've described theoretically how that's a possibility and how you would prevent that from happening. But then you know, let's say you do have them bonded by liquidity. Well, shoot, then you got these ETH Genesis whales that are like, okay, I'm only going to be able to get 5x to 8x on my Ethereum, but I can still go pump the EHEX price and stake that and get yield, and now they're trading it at $1. Meanwhile, they're pulling the PHEX price up with that because they're injecting the liquidity on that side. The pairs are bonded enough. Now they're moving together. So it does make sense from that angle.
So if there was cheap pulse hex, Ethereum would die. The Ethereum hex would die. If there was cheap pulse hex, Ethereum side would die. I don't see a scenario where that's going to happen. Because if everybody would literally emergency unstake their shit and all run over to Pulse Chain, how would you prevent that? And that's why I'm telling you that this is why I believe that because look, if the Ethereum hex side were to die, that would be exactly what everybody and their brother would point at and say Richard's a failure. And there is no way in hell you can allow that to happen.
I think even in the event where you didn't even get the bonded liquidity, like I just don't see EHEX dying. Just because I think that there's enough reason for Ethereum whales to chase the green candle in the same way. Like they will.
Did you watch how many people left for the new forks? How many people EES'd and left for the new forks because they thought it was going to happen there? And they were in a hurry to rush over there and buy the cheap X, and they'll People that had more sold it down on their heads.
I actually didn't pay attention to that because I didn't see value in it. So
Yeah, so we've got a good example of what happens when a fork
there's
launch
no volume or liquidity over there. I do know that
it isn't properly stabilized.
Yeah.
So we've got an example of what happens if the OA does nothing, right?
Yeah.
We don't have an example of providing
It's true.
providing
It's a unique moment, man. I'm going to be excited to see how it all plays out.
There was no fixer bot over there, and so people bought up, people bought up 100 million hex super cheap, and then we're ready to dump it. I shout out to Nikki B, who's loving this panel and conversation, and along with 500 other people who are watching live. Thanks, Nikki B, for the many awesome super chats that you've done. Another $100 super chat there, and so many people watching right now. Make sure to follow each of these speakers on their respective channels. And I want to make sure in the next 12 minutes that you all get a chance to say where people can follow you and like what you do each week and what your streaming routine is. Johnny usually says, don't follow him. And then that makes even more people want to follow him because he's such a good guy. And
And I do one video and it turns into 130 clips, and then everybody's like, "You're trying to be a guru." No, I'm not. I got a troll in my chat right now. I see him. Johnny Chaos is so tunnel vision. He only believes what he believes without common sense. Yeah, no, dude, I've got no common sense. I'm not a product development guy at all that's created things that have been purchased by NASA or built medical models that were featured in the world's largest medical conventions. No, I don't know shit, dude. I'm just some dummy.
Nah, I can back you up, man. Johnny's been the voice of reason for 3 years on Hex, and anytime I come out with technical data, he's there listening in the background, and then he comes out with some clever, funny way to describe it to the normies so that they get it. And I hate to say this, but crypto at large is now turned into normies. Like most of them, the real OG, deep technical crypto guys, or even just people that understand really anything about crypto, are few and far between these days. I think the Hexagons are some of the bleeding edge of the industry. But yeah, Johnny's he's always been out here teaching and preaching. So appreciate you, brother.
Thanks, man. And and I appreciate you pointing out that we need to change the culture where people are not just smash a button and sell their whole entire stack and expect to buy back. Well, and they start learning how to invest, and they start appreciating what they have.
This is why Gary and I are coming together on Wednesday, is because it's so important that we reframe this conversation around what you hold, right? That's one of your big things, is people don't know what they hold and they don't understand the power that they have. And now that you've had the big flush out from the bear market, it's time to start shifting the conversation towards things like what Ben Cage are talking about the institutional interest in that yield. Like when Hex is trading at dollars, like there's going to be so much opportunity for the everyday guy that buys now to stake it on shorter time frames and live as a function, sustainably in a system that gets adopted by 5 or 10x as many users, right? Because you're front running all of the action that comes with the green candles later, right? Right, Gary?
Yeah, I mean, there's competition on the launch for like audience participation, ROI, 1000x, all those kinds of things. But like a majority of investors on the planet are looking for stable line. They're looking for a stable line. And if it has an ROI, like, that's why you hear people say, don't buy anything that doesn't pay you to hold it. Like all the narratives in the financial space. There's a time for volatility, and the launch that we've had, crypto 14 years ago, migration into smart contracts. These narratives pivot every so often and they hit new pockets of money. But sooner or later, even that pocket is searching for some stable line. They're not looking for hard volatility, trade in, trade out, anxiety, glued to the screen kind of stuff. So it's natural. And so when you were saying something earlier, when I came in the room or was listening first, was about 100,000 hex. I think you were talking about, and you showed like what the R on the hex calc, like it was like 4,000. I think it was like $4,000 every 3 months or something like that. You were showing.
Yeah, at $1.
Yeah, and so that's basically the realm that institutions deal with. You know, they're looking for a stable bond for the teachers fund or for the fireman's fund and things like that. So and there's some of them that, you know, they're just mandated even by law that they about what they can and can't participate in. Sooner or later there'll be crypto products that offer that. Right now, you know, when it comes to Bitcoin, or is this a gas coin as far as Ethereum? Is this, you know, what's the use case? What's the utility? You know, that still dominates a lot of the narrative around cryptocurrency. But you know, things that are, you know, sovereign control, you keep your keys. You know, the risk in the system isn't, you know, hopefully we get past a point where ramping and things like that aren't even the concern. You know, so yeah, these are great topics.
You know, and to your point, like about, you know, again, I love this topic of institutional awareness, is because when you look at where Bitcoin's at now versus where it was, you know, even just 6 or 7 years ago, the market has grown to the point now where, like, if you heard me earlier in the stream, you can buy $100 million or $500 million of Bitcoin and expect, you know, a 2 to 3 to 4x in a short period of time, which is unheard of in legacy finance, right? And this is due to the scarcity of the supply and the Bitcoin mining economy and the front running of each halving and these different economic factors that plays into the adoption rate of Bitcoin. And even though it's a dinosaur coin that makes miserable returns for the retail investor, it's still meaningful returns for somebody who can ape in 500 million or $1 billion and see $2 more billion on the other side of that trade within 3 years. And so what I want to remind our institutional investors who are getting into HEX now is you're literally getting to relive Bitcoin from the inception of it in an 8-cent hex. Now it was only 5 cents a week ago. Like, you're reliving it again, and you could be on the edge of this and capture this immutable value, this code that cannot be changed by anybody, not even the founder. You can capture a piece of this inflation rate now for 8 cents, and you can help bring the price higher and really not take that much of a hit short term and realize an infinite, virtually infinite upside in the form of consistent yield on either side of this fork. And that's why it's so important that we brought Johnny on and we brought Gary on, and I can't wait to continue this conversation on Wednesday with you, buddy. Appreciate it.
Very cool. So we're going to move over to watch RG3's channel. Is that what the thought is in the next 5 minutes?
Absolutely. So in 5 minutes, then at the top of the hour, RG3 should be going live with this person who is really loved by a lot of Hexicans. I know this is David Feeder's favorite person to watch in the legacy, or basically the legacy system. But the alternative side of the legacy system is Gregory Mannarino. And somehow RG3 got Gregory Mannarino to come on his stream tonight, by the looks of the thumbnail. And this is going to be incredible because Gregory Mannarino gets like 50,000 views twice a day. He streams live twice a day, and he's been doing this for hundreds of days, I think. And just has tons of people.
For a long time. I was watching him in 2009. Yeah, so 2009. Wow. You know, he's been making content for a long time, mostly about stock. And then he used to, when the metals were kind of highlighted in 9, 10, 11. I watched his content all the time. He's high energy. That's why he gets so much audience also.
Awesome.
And so we'll do a raid. Yeah, we'll do a raid for that in 5 minutes, but we'll keep the party going until then. So if you haven't smashed the like button, then do so or get out. If you don't have a Trezor, then use my referral link to get one, because you're going to want one before Pulse Chain comes out, and the time is limited before Pulse Chain comes out. I did a survey, and I'm blown away. This is the most excited I've been to ever do a survey in crypto. I asked 20 minutes ago in the live chat, do you have a hardware wallet? And 81% of people who are watching who responded, the 123 people who responded, 81% already have a hardware wallet. How cool is that?
That's really good. We must be doing something right over here in Hexaco.
Oh yeah. Oh yeah.
Yeah, I just want to reiterate what I'm theorizing. I don't have control over. I don't get to set it up. What I'm talking about is game theory, and This is what
You're not the
what
OA?
could happen. Huh?
You're
Yeah,
not
it's
the
OA.
OA?
Oh, come
I
on.
think you do have input. I think you are the one throwing the lever, Mr. OA.
Well,
need
you
to get
guys
Greg
all
to watch
think-
this.
I'm trying to avoid everybody thinking I do when all this happens just the way that I say it does, because it seems really damn funny that you have to like scroll back through my tweets like a year ago to catch up. 'Cause I'm just calling shit too far. Everyone's always makes fun of me up until the point it finally happens, right? So
Well,
I'm
your
excited.
prophecy of Hex being like diamonds and the De Beers corporate. I mean, Johnny, when Richard started tweeting about diamonds, literally,
mhm.
people like me were thinking that he was going to get engaged. That's how wrong we were. Okay, and you had to break it down and explain it to us that diamonds are not rare, but they're highly valued. And
Yeah.
that was a really cool moment to hear that analogy, and you do such a great job with analogies.
And people need to understand what moves the price is what's available in the case. Okay, it's not how much something actually costs; it's what's available in the case. People like to look at market cap and they're judging things. There's a difference between market cap and available supply. There's plenty of diamonds in the earth, folks. Plenty of diamonds in the earth still that haven't come out. You can't see those on blockchains, so nobody counts them, right? The only thing you know is what's available for you in the case at the time when you go to the store. And whatever store that you go to, you're going to pay that price at that store at that time, if you want that thing. So, and that's what happens with Hex with the low liquidity. When people say low liquidity, I like to replace that term with low availability.
Yep.
I won't say liquidity because liquidity is a term that scares people because people don't understand the
Scarce
functionality
market
of
supply,
liquidity.
another way to do it.
Yeah, it's available market supply. Yeah,
Yeah, it's like
there's
it's like De Beers. Remember, that's one of the best examples.
yeah.
Oh, keep in mind, there's, Crispy Man from Hex.io has done this number crunching. He's found that there's really only 10 billion Hex for sale. Remember, at 7 cents, that's $700 million in a market that did $6.25 billion of volume from October of 2022 to October back to 2021. So it's like not even a seventh, right, of the volume. So
Yeah.
I'm sorry. So that just shows you the kind of runway we have.
Isn't it funny that same number was used when I said if the OA were to match Hex 10 billion to 10 billion, nobody could move the market? Isn't that kind of interesting?
There's
That
only
I used that
54 million available
number?
right now for sale, guys.
I got a question. I'm going to dash out to the other space in 2 seconds. I got a question, kind of a round room question. There's this popular thing called KMF, kill, marry, and something else.
Nah.
And I want to ask who you're going to throw under the bus. If you have economic energy set aside to participate, you cannot put it into one of the 3 products. If you are going to sacrifice one and throw it under the bus, you can add to your other 2 stacks. So Hex, Pulse Chain, PulseX, which one do you sacrifice to add to your other 2 stacks? Start with Maddie.
Ooh. Let me see. So I sacrificed more for Pulse Chain than I did for PulseX. So if the ratio looks good enough, then I'll try to even those out. That's my answer.
No, that's not the rules. You've got to throw something under the bus. Which one are you going to?
I'm gonna throw some of my Pulse under the bus.
Okay. It's gonna hedge by balancing. Okay. All right. Let's see if Johnny has a favorite. Is there any other KMF that you would?
I think that Hex is going to benefit from the other 2. So I would pick Hex over anything else because I think it's going to start out higher and it's going to be a multiple of the others. If I were to pick the lowest, I would pick the dumb pipe, which would be Pulse. And I like PulseX because of the buy and burn. So the one that gets chucked under the bus would probably be Pulse. Although, again, the thing with that is they're all pretty much going to move together. So there's really the only wrong position you can be in is not having one.
Cool.
Yeah,
All
I mean,
right.
I think, you know,
With
I
all
think,
your charting and
yeah.
analysis, and basically, you're going to suffer the slings and arrows of everybody with what you say next.
Yeah, well, there's no question about it. I'm keeping Hex all the way. I think that's the first mover. That's the thing that's going to potentially see hundreds of dollars a coin in our lifetime. So I'm all in on that, and the rest of it's just for fun. So like I'd like to think that when if I'm factoring in the day, like the first 2 to 3 weeks of price appreciation, I'd be sacrificing my pulse Hex. But if I'm thinking long term, I'm sacrificing Pulse in favor of PulseX due to the volumes. If you get any kind of volume similar to what MetaMask is doing on a daily basis, you could be burning like $4 to $5 million of PulseX a day, which could be a rapid fire for the price action of PulseX. So depending on time frame, that's where I stand on those two. But I'm all the way Hex.
But Gary, everything comes down to liquidity, routing, and pairings. So it's really going to be hard for these things to do to stand out and shine brighter than the next, because it all comes down to the pairings.
So my KMF is I would definitely keep Hex, not just because of the fork, but because I like the smart contract nature. I like that it's immutable. And with that narrative, although I think that there can be some admin to add new tokens tradable for the platform of PulseX, from what I understand, it's still smart contract. So as far as what can be added or the front end and things like that Uniswap did, or Pancake and others have done, that is the only level of admin I'm accepting, really. And when it comes to Pulse Chain, I think I would throw that under the bus for myself to add to the other two stacks. And I say that because those are going to continue to be like Ethereum, that there will be a disinflation, or kind of as it becomes more popular, there'll be all kinds of narrative about it being the L1 or the base. Never sell with some of these liquidity forks, maybe. So I think price performance wise, it'll do just fine. But I do like, that's why I like silver and gold in the past and all these other things, is I like things that are, other than adding V3, V4, future pools and migration, I like the smart contract nature of the PulseX brand. So I would personally have to sacrifice Pulse Chain for me.
Thank you guys so much. Thank you so much for being on here. This is you're all audience favorites, and I listen to all the stuff you guys put out too. So thank you for being here. Everybody go follow these guys on their channels. Right now, we are going to go raid Discourse Syndicate, who has an amazing guest on, Gregory Manarino. So I shared the link. Please go over there. At least stop in there and pump up those numbers, because we've got Dollar Cost Crypto, who's had 300 people watching him live. We've had 500 people watching live. Let's all go enforce and raid the next stream.
See you, Les. Peace.
Yeah.
See you.
Thanks, everybody.
Thanks, Manny.
Thank you.